should be good any second. This webinar is being live streamed. Okay, let me check the Twitter and YouTube, make sure it's working. Should be good in something. This webinar is being live streamed. Okay, let me check the Twitter and YouTube, make sure.
Look, it's following me over here.
That's so cool.
That is crazy, actually. Wonder if we can see, like, there's a really cool painting behind me.
All right, we're good. It's working on YouTube. We're good on Twitter. We got some people in the YouTube. Zoom's filling up. All right, we'll give it a minute or two here. Let everyone join in.
Boom, boom, boom.
All right, we're good.
All righty, we'll let some people connect. Hey guys, what's going on? Good evening here. Well, hey, let's get started. Let's get rocking. Alec, PeopleWish, thanks for joining us today. It is it's an honor. It's a privilege. I'm really excited to talk markets with you, talk about your strategy, your system, and the way that you communicate that to others as well. But first, the standard question of what's led you to this point? What made you fall in love with the markets and trading?
Um,
And,
yeah, no, thanks for having me, dude. I honestly long overdue. It's actually the first live interview I've ever done. I don't know how many have been offered. I've denied every single one of them, and my denials are getting more and more aggressive. But you guys are actually traders, and you actually understand, so it's a little easier to do this with you guys. Um, so I started trading like most people did back in COVID times. It was like I think May 2020, I think is when I started. And it was really just there's just nothing to do. Me, I have to keep my mind occupied. I'm always building something, whether it's a business, whether it's uh, just a project at home. I'm always building something. And my dad, he was always really involved in the markets. I didn't get very involved in the markets until about COVID, obviously, is when it started, because I was just busy doing other things. Um, and so yeah, it was just bad timing. You weren't even allowed to leave your house. And I remember it like yesterday. Uh, there was like I woke up in the morning and he's watching TV downstairs, and there's a Fox News article that my buddy Greg sent me, and it was like SNRE, like cures COVID. And I just got my account funded, and I just full ported it into SNRE. All right, yeah. Dr. Henry G. He said he was gonna make the shorts pay. That was they're out of business now. But yeah, that was like my very first trade. And I held it for months. I had no idea what I was doing. The story's actually kind of funny. Um, I ended up basically giving it all back because I was climbing a mountain out in Montana with my buddy for his birthday, and I didn't have reception to sell. But I was up like 500% on it, and I ended up selling it basically back, not a break even. I made some money on it, but that was like, holy crap, I can, you know, buy some digital property and it can go up in value really quickly, like much faster than really any other way of compounding money that I can think of. This is great. Let's do it. And this was also at the time when TikTok started to really proliferate or become prolific. So a lot of creatives were hopping on TikTok, and I think YouTube was already pretty saturated with the course people and just like the like daily streamer types. So anyways, I was just playing with TikTok like everybody was back then when it first came out. And there's this guy on it who's just marketing really well, crazy gains. His name's Cam the Man. Cam the Man was a day trader, he still is. But he had a free day trading room, and there's like 50,000 people in it as a Discord server. And I hopped in there and just started learning to day trade. I was pretty busy, so I didn't have a lot of time to trade. Like I couldn't trade all day long and really be a true day trader. Watching the ebb and flows of, you know, high momentum, high liquidity stocks, like on the 5 minute chart or 1 minute chart. I couldn't do that all day. So I focused on like just simple 5 minute setups. Um, but I started to really think about how can I turn this into a business for myself and how can I really scale this? And when I just started doing the math, day trading just it can't get me to where I ultimately want to go. Like everything I do in life, I never want to get involved with an opportunity that has a low ceiling. So if it's a business that I don't think can, you know, become $1 billion business, if it's uh, operated properly, if it's marketed properly, if it's structured properly, managed properly, I I don't really want to be involved with it. And I don't think day trading, obviously, I know for a fact day trading can't really get you there. It's a liquidity issue, right? And then also it's just a balance of like how much time do I have on a daily basis? How much time do I want to offer? Like what piece of my pie, which is my life, and then my waking hour, do I want to allocate um, to sitting in front of the charts? And I don't want to allocate a lot, maybe a few hours, if that. And, I don't really want to go to work. There's no work to do. I have other things, right? Like every moment of my day, I want to maximize essentially. And so if I'm just sitting there kind of flipping, a few shares for pennies, it just really wasn't for me worth my time to myself, having a conversation with myself. So somewhere along the way, I met Ariel in Cam the Man's group, and we hit it off right away. We're the same age. We have very similar interests. And then also we have very similar like values and morals and drive. So we just kind of linked. It was like, brothers from another mother sort of thing. And he introduced me to Christian Gulamagi. And Ariel was basically having the same realizations that I was having. I think this is right around the time too he got kicked off toss. So he's like, scalping these like low floats is just really not the way. And it's stressful too. I'm really at the end of the day, it's pretty stressful. Um, so yeah, anyways, as soon as he introduced me to Q, I'm like, oh, this makes a lot of sense to me. Q, he's systematic. I don't think by intention, but I think just naturally. Like he legitimately doesn't want to be at the screens if there's nothing to do. So he's not there. Me, I want to be at the screens. I love charts, but I go, Alec, you should stop. There's nothing to do. You have other things to do elsewhere. Go do things elsewhere. All right. And so I kind of applied my very systematic approach to things uh, as a layer over the top of like his teaching. So I just started watching every single stream. I mean, he streamed every day, every morning for years and years. So like that was back in the day when he was actually still live streaming. And obviously we all know he stopped doing that. But as soon as his live stream would end, I would go back in time and start watching ones that I wasn't even, born as a trader yet when he was streaming. Right. And I just watched every one of them and I modeled in spreadsheets and I just went through chart history, just all chart history. Really studying the events that led up to big, clean moves, big, clean, high liquidity moves. And, fast forward a few years of basically doing the same thing, preaching the same things over and over and over, to where we are now. I've just gotten better at saying the same thing over and over. It may sound different if you listen to me speak in the past. It may sound different, but it's really all the same. If anything, it's getting simpler. In the TA perspective, I am kind of foraying into how do I gain conviction to hold stocks longer. That's a little bit more complicated, but we don't need to talk about that now unless you guys want to. But
Well, that's interesting because
yeah.
like that's kind of like what like the short bear, for example, like kind of what he's experienced over the past 2 to 3 years, and which in my opinion makes him very impressive because watching his short bear's transition over the past couple of years from that small cap shorting in 2020, swing trading to these like big trades like Baba and things like that has been really interesting. And I've noticed that you're kind of starting to do a lot more of that as well.
I can only aspire to have the level of natural computing ability that Lucas has. He's a freak of nature. He's what I call an alien. You know, you can look at him and you can observe him and you can pick out things that he does, but to try to emulate what he does is nearly impossible. Like you can't emulate LeBron, you know, you can't emulate Kobe. I don't think you can emulate Lucas. Me, you can emulate. Me, you can copy verbatim. It is granular, it's binary. The, I say that. Others who kind of observe me don't totally agree, but that's what I aspire to be. I aspire to be like if it's nuanced, it's still binary. But yes, I am trying to hold positions longer. One, it allows me, it gives me a larger opportunity set so I can trade lower liquidity names, knowing that I can kind of piece myself into them. Before, like last year, this time, I bought everything with one click. I never like pyramided in. I
Okay.
never, yeah, I would never do that because the stocks that I would trade, the liquidity profile, which is the dollar volume average over, you know, X period of days in the past, would be proportionate to my account balance and proportionate to my average position size. So basically, an easier way to say it is if I were to buy a full size position, I don't move the stock,
Yeah.
right? And so, you know, now my account's grown some. I still want to be able to trade, you know, stocks that are $75 million dollar volume, right? But I can't just jam it in. So I got to learn more about the company. So I'll buy a little piece, right? Like QS, I tried to buy today. I get situated. I can see the chart theme. I can see it moving with other stocks like TE and EOSE. And you know, it's one of the beta names that's held up. It's in the upper half of its range. And so it's got a ton of momentum. It's coming out of like this death downtrend of years. But I'm like, all right, how do I get into it? How do I actually trade it? And I don't really know anything about it except for it's in theme. They sell, you know, some sci-fi stuff. Let's get a little piece and let's learn about the company. Um, so that's how I can get situated there. But otherwise, I'm, you know, focused on, you know, larger cap names that still have a, you know, I want to trade stocks that are fast and liquid. So whatever the fastest stock is that meets my liquidity profile, that's my opportunity set, if that makes sense.
100%.
So
Yeah, I
yeah.
was going to ask because I think we do have a good chunk of people in here who have never really come across your content or even know anything about you at all.
Okay.
So like my next question I did have down was like if you could just explain your trading style and your trader mission statement, right? What is your goal? How do you like to trade? And stuff like that. So, some people get an idea of, what kind of trader you are.
Yeah, so I mean, it's so hard to actually define it in a way with a word that's with a term that everybody would understand. But essentially, I'm a swing trader transitioning into more of like an investor. So I started as a day trader, very TA driven. I'm using those skills to get myself positioned into bigger moves. So, you know, I chart on the daily and weekly primarily, and I enter on the 5 minute chart. That's the day trader, like in me. Um, and I am taking like anywhere between 5 and 10% position sizes on average, unless I have some high conviction. And I do have one position that's hovering right around 25% right now. And my goal now is to hold these things for as long as I can on higher time frame moving averages. So like the monthly 10-day SMA, which is kind of the mother of all moving averages for a trend that you want to follow to get you to capital gains. So that's another thing. Real traders hate taxes, hate them more than anything. So I want to mitigate taxes as much as I can without moving to Puerto Rico because that yeah, I don't want to do that either. So I got to figure out ways to hold these things longer. So buying charting on much higher time frames helps a lot with that, but it doesn't help grow small accounts fast. So I guess to answer your question, I'm a swing trader. You know, like everybody knows Christian Kulamagi. So think about him. That's kind of what I do. Uh, you know, albeit I think slightly more systematic, but and probably not as good, but getting there. He's been doing it a lot longer than me. I'll catch up one day.
What is what is like I know this would be fairly general, but what is like three steps that someone with that you would characterize as a smaller account? What are like three steps that they should take to be more on the path to growing their account efficiently and effectively?
Well, I mean, I think premeditated trades is probably number one. I mean, if you want to get away from like, okay, look, there's a lot of like PvP style hyper scalpers that get in there and it's literally a video game and they can do it. Like they can just read the tape, read the level two, and they can go to war and eke out gains. If you want to do something more than that, well, you kind of need to think about what are other options for actually making money. Like lay out the actual ways to make money, create yourself a menu and choose from it. Okay, hyper scalping is one. All right, you don't want to do that. It doesn't fit your lifestyle. Well, that's off the table. Investing is another option, like long-term investing. Okay, well, you have to learn the companies, you have to do all that. Well, you don't want to do that either because you want to make money quicker. Okay, well, eventually, as you work through all of your options, you should land on something that makes sense and that fits your lifestyle. And, there really are so many options. Swing trading is really popular. It's growing in popularity. It makes a lot of sense for people who are busy, who can only allocate, a few hours a day to trading. Uh, so, for me, it's like it kind of depends on where you are. If you haven't started trading at all, I would first ask you, well, how much time can you allocate to this on a daily basis? The fastest way to learn the markets is indeed day trading because the same setups that you see on a monthly gold chart happen on the 30-second chart on gold, right? And so it's the same mechanics that shape charts across all time frames, essentially. It's just a reflection of us as humans and the decisions that we make, and a bunch of other stuff. But if you understand that, and if you trust in the fact that technical setups they happen, the same ones happen on all time frames, and they have been occurring since the beginning of technical setup, since the beginning of technical charting, well over 100 years ago or so, right? So like, there's not like a flat base breakout is not a new concept. So if you kind of like start thinking through that, um, I think you'll eventually land on uh, you want to be able to do something that is repeatable and consistent and that is comforting and that doesn't stress you out. Like you need to define your goals ahead of time. And it's like I can't go in the back and find your shoe size, like the shoe that you want and your size if you don't tell me your size, right? Like if I don't understand the scenario in which you live, it's very hard to like uh recommend a trading path, right? But like if assuming that you have all the time in the world and you can just sit here and focus on the screens, I think that you would start as a day trader and you would start learning, like if you understand that the goal is eventually to be swinging weekly charts and understanding the fundamentals behind the company, using TA to get situated properly, understanding the fundamentals behind the company, buying story, buying tailwind, if that's where you want to get and you want to manage an enormous account one day, but you want to start by growing an account quickly, well, I think that you should learn TA like with intraday swings or 1 to 3 day swings like Pradeep's like momentum burst style. It's essentially you're emulating like a flat top breakout on a weekly chart on a 5 minute chart. And you're selling 50% like week 4 or 5, you're selling 50% like 4 or 5 5 minute candles into the move. The moving averages are still the same. The calculations are still the same. It's all the same. So if you start day trading, you just get more reps in, right? Like you just see more setups. Now, that would be for somebody who has all the time in the world and it's like, I just want to do this. It's very dangerous, though. You can fall into, I think, a lot of traps. You can lose money really quickly. So I think that like I know it's kind of like a faux pas, but I truly don't think that people should use any money at all when they first start trading. The argument is, oh, well, you don't know what it feels like to have money on the line and whatnot. And I say trading shouldn't be emotional at all anyways.
Makes
So
sense.
so you should start from a place of where there is no emotional attachment, which would be paper trading. Or let's just say you have $100,000 net liquid in your bank account. Start with, I mean, heaven forbid, I mean, PDT sucks. We should assume there isn't PDT. Start with $1,000. Literally wager $1,000. That's 1% of your net worth and trade with it. Trade with it. And if you blow that up, okay, great. Put another thousand in, right? Don't go in and start like don't would you invest in your friend's business who you don't know anything about them, but they say, "Hey, I have this great idea. I'm raising
No.
$1 million from you. I would like $200,000, good friend, sir. Trust me, I'm going to do a great job and I'm going to return to you millions and millions someday in the future." Like you'd just be like, "No." You wouldn't even consider it. But yet for some reason we all have like this like false sense of like ability to perform. Like me, I actually kind of like I do have a pretty strong personal perception of myself because I look at the things that I've built and I'm able to apply other things outside of trading to trading. And so it gave me a ton of confidence where I can say, "Hey, look, I can approach this systematically. I understand like, risk in a different perspective, like financial risk, just being an entrepreneur." So I was able to apply those things to trading. So it kind of puts me in a different place. So that's why it's like I wish I had a prompt that I could give everybody. And it would be a prompt like a LLM prompt that, the user would go to it and it would say exactly the question that you just asked. I want to grow my account quick. I don't really know how to do it. And then they would hit enter, and the prompt would go, "Well, tell me about your life and tell me about your aspirations. Tell me about your habits. Let's like look at you as a person from a like psychoanalyze the person. Do they have 5 kids? Like, do these obviously the kids depend on them? Like, you know what I mean? Like, it's not like, they got 5 kids and, their grandma's there, they're taking care of their grandma and they got like 25 grand in the bank maybe, and they're in 100 grand in debt. I probably wouldn't recommend you know, like being a hyper scalper with half your money, right? Like it doesn't make a lot of sense, right? Um, so I don't know if that answers. It's a very hard question to answer. I've been thinking about how to answer it properly for years. But yeah,
Well,
it really depends on where you're at.
it's interesting. So you've got your group, the Day Traders Rehab. Um, so you're essentially taking them from that first step after they've kind of seen the repetitive setups that you suggest on like a 2 minute or a 5 minute chart, and they have that awareness of some of the patterns, and then you take them then from step one to step two into the scalable swing trading portion, if you will.
Yeah, I mean, ideally, in a perfect world, that would be like the progression. But day trader rehab, I really just kept it as my like chart journal. So there's a
Mhm.
whole library of like all of my setups, and there's hundreds of thousands of messages of just me brain dumping and whatnot. And I was shown like I didn't know the Twitter etiquette back in the day, so I started posting like P&L, rather large P&L, and my DMs just blew up. Right. And like everybody's just spazzing, like, how do I learn about it? Like friends and family, like all that. And so instead of me just having to like repeat, 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 which I love to do, honestly, because I look at it as an iteration. So every time I iterate, I get better at messaging. It reinforces in my brain. It simplifies things. I'm always thinking about these things, but it's like iteration loop. But yeah, anyway, I just opened it up to people to join. And I'm like, how many people are going to join? I don't know. Not that many. So I started charging $300 for like a lifetime membership, and then we dropped it to 45 or 49 or something. It's all donated to charity, which is cool. Haven't taken a dollar. And yeah, it just gave people access to everything. And so again, though, it was me transitioning and recording my journey from being a day trader to a swing trader. And so, in the context of my life, so if you are a day trader and you do understand like what VWAP is, you do know how to navigate around your charting software, you know how to place trades, right? You know how to set stops, you understand patterns, right? Um, if that's like the beginning mean of the majority of people coming into day trader rehab, I taught people just how to do intraday swings. So the best way to transition was to still follow the workflow. So you build a watch list overnight and you find essentially the same patterns intraday that you think look good. You find them on the daily chart. And so you prepare a list of names and then you set levels where you will buy the stock if it moves through the level. It's just some like high volume, some significant area, right? That would be if price is over it, it's a breakout or something, right? And so the day trader would then come in the morning, they have their list of stocks, they have the triggers set, and when price moves through it, they buy it. Okay, great, they're in, but they would sell at the end of the day because day traders are terrified of overnighting because rightfully so. They're shorting stocks like SMX, right? Like I would be terrified too. And we've heard some horror stories recently, right? And there's
Mhm.
actually some big groups that are exploiting a lot of these algos, the short algos right now. But anyways, yeah. So to like, you still got your day trading like fix in. You got to execute on the 5 minute, uh, but you did all of like the swing trading prep. So if you just had like the conviction that you bought a legitimate like daily setup that could run for weeks or months, and oh my gosh, it may have actually coincided with a weekly breakout. It could run for months or up to a year potentially. Um, then all of a sudden, when you sell it at the end of the day one, because you still don't trust overnighting, you check back a couple of weeks later and look, there it is. Sure enough, it's up 50% or 100% from where you were. And so that was like the best way for myself to transition, where it
Mhm.
was like just do the swing trading mechanics that Qualamagi taught. He'd build a watch list, he'd set his alerts, do those things. But it's like just dip your toe in, and then I would sell, I would sell, I would sell. But I realized though, I was able to quickly compound my account doing that because every time you buy, sell, buy, sell, buy, sell, the math supports it's more compounding. So your account will grow faster, right? As opposed to if you were to buy, hold, and then sell, buy, hold, and sell. But eventually you run into liquidity issues where it's like, or great daily setups just don't come around all the time in some market environments where it's like, man, I really wish I didn't sell that day one because times are kind of hard. Beautiful setups don't come so often. Uh, but yeah, I mean, if you want to grow an account fast, especially when setups are prolific, short momentum bursts and turning over the edge and sizing your positions relative to your accounts, like a 10% position fixed, because a 10% position with a $10,000 account is $1,000. The 10% position with a million is 100, so on and so forth. So if you compound that position size over time, trading the same repeatable patterns and just increasing your exposure or just trading higher liquidity profiles as you go, because the system breaks, as I was explaining earlier, if you just kind of kept like if you had like $1 billion account and a 10% position was 100 million bucks, you couldn't just jam it into QS, right? Like we've all seen the video of Christian Kulamagi halting costs.
Yep.
There was one I halted earlier this year by complete accident as
I
well.
remember that.
I don't even remember what the ticker is because it was just a complete blunder. But that can really happen if you're just looking. I was just looking at the completely wrong stock and I just hit the button or something. I didn't even intend it. I wasn't even looking at it and it happened. But I mean, like that can really happen. So you definitely want to, but for most people who are just started trading, that's not an issue at all. But you should just get in the system. So, or in the process, like every week, I'm looking at my account balance and then I am adjusting the dollar volume in my scan so that they're always the same ratio. So that like if I do have a crazy week, it's just a part of my workflow. I used to like I have spreadsheets just full of my process essentially where I would go through and I would tick all the boxes just like a pilot does before they take a flight, right? Like that's a whole nother concept where it's like, obviously we want a pilot to be trained before they fly us, but yet we don't know anything about the markets at all, and we're just willing to put capital at risk, which financial ruin is pretty heavy, is a really heavy thing. Just like, you wouldn't feel comfortable with like, some 7-year-old kid flying a commercial airliner with, like it just doesn't make sense, right? But yet for some reason, we all think that, especially starting off, we're just capable of doing highly technical things where the risk of ruin is really serious, right? So that's why I really think it's so important to kind of do an exercise before, like if you've traded and you've traded for a while and say you're successful or not successful, whatever, it doesn't matter. But say you're ready to just kind of hard stop and move on to another chapter. Okay, take that as a great time to really go through an exercise and think about what are your goals and not just simple, like, I want to make money. No, no, think about the people that are around you. Think about the things that are really important to you. Think about the things that will be important to you in the future and build yourself like a 10-year avatar of yourself and say, okay, look, on average, I'm going to be able to allocate this time to trading and just lock in and commit to it. And I think when people start thinking systematically like that, it just alleviates stress. It alleviates pressure. The need to perform. Day traders, there's so much need to perform. Like nothing makes me cringe more when I see these monthly reviews. I think they're admirable, but they're caught in their own feedback loops, unfortunately, where if they have just a couple of bad days in a month, it's all over. If they have a bad
Oh
month,
yeah.
it's all over. Like none of that matters. What matters is like doing something that has edge consistently forever. Like if you just took a spreadsheet and you plugged in 10 grand and you compounded that 10 grand 10% per month, and then, there's like a reduction factor to it, but it doesn't matter. If you're just consistent over years, you will make any amount of money that you want in the markets. It's there. It's truly there. You don't have to make 300% a year, though it's very possible, especially with smaller accounts. But as your account gets bigger, like what did Warren Buffett say? Not too long ago, he said it's basically big account problems, where they like Berkshire has issues deploying capital just because they need to be able to deploy capital and opportunities that are going to stand the test of time, that are going to live through various political cycles, and that are just big enough opportunities to even deploy the capital in, right? Like, so all you have to do is just stay consistent. And the month or like the monthly reviews to me kind of it's hard. It's just a competition, really. And I think it's really the competition should be with the opportunity set and against your actual mission. And I don't know.
What do you so about the monthly reviews?
Yeah.
Generally that you're talking about. What is it that you see, and what is it that you would recommend to someone at either a 4.5 star skill or a three
Yeah.
star skill level?
So I think monthly reviews are absolutely essential. You have to do them internally, but it all depends on your style of trading and the criteria that you've laid out for yourself for executing on a daily, weekly, monthly basis. So if you were to develop yourself just a monthly note card, right? And every month on the first day of the month, you're starting here. It's like Candyland, right? You're starting
Mhm.
here. This is the first thing you do, right? You're going to open up a new tab on your spreadsheet. You're going to pull your template out. You're going to go day one. You're going to enter all your trades, everything, and you're going to critically analyze the performance of your decisions relative to the system that you've set up for yourself. So I'm only going to buy stocks when they break out through my line, right? How many instances did you buy stocks when they did not break out on your line, and what did you suffer because of them? Okay, great. It's a very simple thing if you were to take a pen and paper. The issue is monkey brain. The issue is not focusing on the system, but focusing on the button clicking and the video game aspects of trading, the community around it. Discord is gamified, right? You see all these people on Twitter posting their monthly calendars, just showing P&L, which literally shows nothing at all. Like if somebody actually like released a critical like analysis of their actions, like at a very granular level. And these are the reasons why I may have underperformed relative to my opportunity set. That to me would be like, okay, that person gets it. They get it. Because I mean, what is continual improvement? They're iteration loops. If you have a goal, my goal is to make $100 million in the stock market, or $1 million, or 100,000. Doesn't matter. That's my goal relative to an opportunity set that you describe, then you need to do everything within your power to create a little machine, which is a note card or a spreadsheet or whatever you want to do, that you must follow. It's a recipe. Like if your friend says, "Hey, look, your friend, he's a famous chef. He makes the best guacamole in the world. He was on the Food Network because he makes the best guacamole in the world." If he's over one day and you're like, "Hey, I'm about to have a party and I'm going to make guacamole for everybody. Will you give me that recipe?" Sure. Are you going to deviate from the recipe of your friend who made the best guacamole in the world? No, you're not going to. You're not going to start throwing things around and this and that. Like, no, you're just going to make it just like him because you want to impress everybody and you want to do well. And it's easier, right? So it's like that's what you need to figure out. You need to keep iterating until you get that recipe relative to your goals. And I'm speaking in broad strokes. I mean, there's pretty, like, if you just start poking around the internet and primarily just paying attention to people who are successful online, you can start piecing together the methods that they use and their own kind of vernacular and their like dialogue, right? Like
Mhm.
we all are like characterized by these different sort of like personas, like these different sort of like, I don't know, it's almost like an ethos in trading. Like Lucas is, he's like a value investor now. Like that's what people know him as. And he's, like a very well thought, like market observer. So he like basically pulls in all the information from the markets and he using macro news and he's like an investor's investor. But he started like as a technical trader too, right? And then you have like Ariel where he's just like themes, momentum, moving averages, right? Like he's all about group strength, right? Me, I would say that I'm just highly systematic. That would be me. And I think it's easier for people to learn as opposed to like having high market IQ. Like we all heard, we all know the story of the turtle traders, right? Where essentially there's a group of people who knew nothing about nothing, and they were given a list of instructions, and several of them went on to be extremely profitable, right? And so I think that you can do that for yourself in trading. But I think more time needs to be spent on building a system as opposed to trading. If you can make the same amount of money and have the same amount of prospect doing anything else, you would do that, right? Like the reason why we're drawn to trading is because we can make a lot of money fast. You can also ruin yourself, right? So it's like we need to slow down and think about how are we going to structure this business that we're starting as a solo entrepreneur essentially for ourselves, right? Excuse me, phone's ringing. Um,
I actually think one of I think the first tweet I ever saw from you when I first found you on Twitter was something about I see too many people sitting around messing with different indicators all day in this, and nobody's spending time on actually building and refining an actual system. And I was like, oh wow, that's a good post. I'm gonna follow this guy.
yeah, I mean, like if you're gonna, again, I mean, like one of my favorite analogies is just flying an airplane and like a pre-flight checklist, right? Like, like if crashing an airplane can lead to death, and they require a pre-flight checklist to prevent death and property destruction. Uh, Okay, now hold that. If losing all your money can lead to financial ruin and ruin the lives around you, blah, 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 like you kind of go down that path, doesn't it make sense to just have like a pre-trade, pre-flight checklist, like an actual, like if you were to go into like any professional organization across any discipline, there are procedures. And the procedures are there to standardize activities so that there's predictable outcomes. So if you have no truly standardized activity like that you partake, it can be just as simple as like put my socks on in the morning. Like just it's just doing the same things every day. And it can like it's very what I say this to new traders, and what they end up doing is they go out and they write a Bible of things that like they don't stick to because when they get to step three, they realize it broke, right? So there's definitely methods for how to like ease into this so that you don't get discouraged, especially if you're new to systems, because one of the worst things you can do is, spend a whole bunch of time building a bad idea. So there are methods to like kind of sussing out whether or not you're on the right path. And then like one of the big things for me was I would talk to myself, like I would literally like talking to myself. And I would say, like, if I find myself rabbit holing down a dead end or something, I would just go, stop, Alec. And I hit my table. I just go, stop, like to myself. And one of an attorney that I retained for a long time, he told me that. He said, Alex, stop. Because I was just going in this thought loop. I was like, what if, what if, what if, what if, what if, what if? He's like, just stop. You can't control any of those things. Like, let's just focus on what we can control. And it just resonated with me. So now I do that. And I also chant words in my head too. That really helped a lot. Staring at compounding tables. But yeah, I mean it's a mental trading is a mental game. It's such a mental game. And so that's why I think if you can take the thought, if you have to think while the lights are flashing, like during market open, like that's very hard. Like I think it's helpful to be able to react if you have to. Reacting is a last resort. We should always be responding, never reacting. We don't want to be reactionary. We want to respond in a calculated way. That's why I'm such a big fan of scanning the night before, so where we are responding to price action through our premeditated levels. But it does definitely help to be responsive, I guess, or have the ability to react quickly in case something really bad happens in the market. But then again, though, that's where position sizing comes into play. So you save yourself with position sizing. But no, I mean, for anybody who's just starting, I would focus on a system, focus on one as simple as you can, figure out one way to make money in the markets, one singular way. Don't learn every setup that there is. Don't like go to my Discord or your guys' Discord and look at the library of setups and be like, I'm going to learn all of these. Like, send me a DM, send, Patrick or Brago a DM and say, if you could pick one, what would it be? And just study that. My answer would be the one that occurs the most. That would be the one I would say study first, just from a technical perspective. But yeah,
Which one is that?
Most
What's your
reliable.
response? I'm Mr. New Guy, and I want Alec. What's one setup?
So, I mean, assuming all the context before, you have the ability to sit here and you
Yep.
want to make money quickly and you want to compound, I would say, well, we need to focus on momentum. So we're not buying stocks within ranges. So they have to be outside of a range. Okay, we're going to reduce it. We're going to deduce it down together really quickly. You're gonna buy it outside of a range. Okay, so that means it had to have a big move up. So it has to have a big move up. And then we need some consolidation to see if interest is still there while shares sell off. And then we want it to get tight, and then it forms a little flag, and that would be what I would probably recommend new traders to focus on. And what it does is you only trade that single setup. It ensures that you're always trading high momentum situations. You're always trading outside of a range. That's when money is made. Like you don't make money in ranges. Like you get chopped up in ranges. So like by default, like unless you're able to pick the bottom of a range, you're a beast like that, and some traders are. By default, we should be trading outside of the range. So if I were to take somebody off the street you never knew, I would say we're going to focus on big bases that are just breaking out, and we're going to be buying momentum setups outside of that range. And right now is a great time because we have a ton of momentum legs up and a bunch of different names that need to flag. So, and one of the beauties of just taking one setup and teaching one setup is that there's going to be many a times, many a periods, even within a year, where that setup is not around. It's just a desolate wasteland. It's not there. But your system says, unless that setup's there, you can't trade. Unless that pre-flight checklist is there, you can't trade. Now you can like it's totally fine to evolve and add more methods to your playbook so that you can deploy capital at low risk spots in the markets. But in the beginning, I think that we should just focus on one setup. And that's why I think the shorter time frames are better because they just happen more often, right? There's a big move up, a consolidation around 11 o'clock, and then that 5 minute wedge breaks out through previous high day or some relevant level. You buy it and you trail intraday moving averages, right? Like, and you hold for the whole day, but you're buying a daily breakout, right? Like, so you're still doing all the daily workflow. It's just you're cutting it off instead of selling, day 3 or 4 or 5 a little bit. You're just selling at the end of the day, right? So that's what I would do. I would focus on high momentum continuation setups.
Now
What do you
you
think?
we actually talked a little bit before we went live about kind of premeditating stuff and planning stuff the night before. Can you dive into that a little bit more and maybe what your kind of day-to-day routine looks like?
My routine's very different than others. So I think again, like your routine again needs to be kind of calibrated to you, but it still follows the same principles where my day starts at night. So the first action for the next day happens after market closes, preferably after 8 p.m. Eastern, so that all of the after hours market or after hours action is kind of settled and most of the news flows out of the way. Uh, and I just run a single scan. I run a single scan that primarily two variables, one or two criteria. One's the dollar volume and one's average percent true range. It's a volatility metric because I want to trade liquid fast stocks. And it produces, 100 names, maybe a little more. And I just go through them and I look at the charts and I match them to my playbook, essentially. And, since I've evolved, over the years and I've done it so much, I've, added some more nuanced concepts over time that just help me do better in terms of building watch lists. But at night, my goal is to build a watch list for the next day. And I will build the watch list comprising of stocks. I will set alerts as to where I will buy them, and I annotate the chart with how many shares I'll buy and or I'll add it into the alert, whatever. And the next morning, I wake up and alerts start firing, or they don't. If they fire, I buy. If there's capital to deploy, I already have my exit criteria in mind. I'm going to sell X amount on this day, or when price closes below this moving average. It's usually the same. It's very simple. It's just knowing when like the not simple part is knowing being able to look at your watch list and make a basically create a barometer of strength for the market based on your scan and your watch list. So like if your watch list is full of 20 actionable names and triggers, it's like I don't even have enough money. I wish I'm out. I don't got no buying power to deploy. Okay, that's probably a pretty strong market. But if your watch list is like empty, or if you're like scouring the earth to put names on it, you're looking at a different watch list because there's nothing on my 150 name momentum leader list. There's going to be names elsewhere. Like that's when it's kind of like not a good market. So I've all it just keeps getting stronger and stronger and stronger for me, the notion that the strength or the length and quality of my watch list is really like my breadth meter of the markets. So like if you can the patterns, the lines, stuff like that, you just do it enough and you'll get good at it. And then it's coupling a few market cycles and paying really close attention, all within the framework of the system. I think that you can get pretty good at this relatively quickly, honestly. I think most people can. But yeah, that's my nightly routine. And then in the morning, like I said, I just execute. That's it. It's pretty simple. I mean, it sounds like crazy simple, but I mean that's it. Like that. I mean, it's what Qualinagi taught. It's just again more systematic, I think. Because he would build a watch list the night before, and then he would just execute in the morning, and then like shit talk in the morning, and then when he was done, he'd just hang up on everybody. There's nothing to do here. Click, done, out. And he's gonna go play like WoW or something. Like instead of me going to play WoW, I'm gonna go do some other stuff I'm working on, right? Uh, so yeah, I mean that's it. That's it. I know it sounds pretty simple, but
What do you say? Do you want to pull up some charts?
yeah, sure.
I was gonna see if maybe we could like kind of run through the year a little bit, maybe go through some notable trades, maybe some tougher periods or slower
That's awesome.
periods.
Yeah. Let's see. Gotta remember how we do. I know we practiced this before we got on. I guess this
I got a
one.
few questions from the chat, but we'll save them for the end.
It's this one, right? Yep, you can see it. See my screen?
Yep. BMNU, you loaded?
No, I don't have a position, but I was looking at it. Uh, let's see. I mean, my current portfolio, I can just have it right here in like a spreadsheet. That's not gonna work.
That 25% position that you mentioned earlier, is it by chance Open or is it Tesla?
Um, well, Tesla's actually pretty close, but no, it's open actually.
Let's
Hold
go.
on, I can get my positions up so people can see them. All right. Can you see them?
It's still BMNU.
Oh, you can't see a little spreadsheet I overlaid?
No, I
No, probably because it's on specific
Yeah,
window.
it's probably
Yeah.
on the window. You're right. Well, anyways, my
It's
biggest,
okay. We could just go through them.
yeah, I'll go through 'em. My biggest percent winner right now is
nice.
Labubu. I have a 58.72 in it.
Beautiful.
Yeah, I bought it like down here basically. Um, I mean, the idea was real simple for me. It was when I had the epiphany that, and this is definitely the evolution of me not just being a pure technical trader. Like, I would never advise a new trader to take this trade. It's not really like in a playbook. I used some of my technical ability to get into it, but I more so like dollar cost averaged into it. But it was just the simple idea that AI is going to raise all ships, and biotechs are they're the most differentiated sector like within there's so many companies in biotech working on very specific things that will all benefit from AI. And so that was just the idea. And so it's my biggest winner right now. I sold the majority of my hood position. Uh, what was it, like a couple of weeks ago? Literally right here when it wicked off the 50 day. Yeah, I chickened out and I sold it here, but we still have some in the family accounts. I bought it off April lows, so I missed basically everything in April lows. Hold on, let me get these charts a little bit better so I can zoom in and zoom out. I I I caught two names off April lows, and it was SoFi and Robinhood. I missed everything else because this was a setup that was not in my playbook. Um, This was a setup that was not in my playbook, but it got added to my playbook, and it's actually happening right now. But it was essentially a UNR, a double bottom UNR. It doesn't happen very often. You need a pretty big sell-off like what we had right before Trump announced tariffs, which are about here, and then right at Palantir's earnings. Uh, it sold off a ton. We undercut the 200. I just didn't really think much about it. Actually, the hood breakout was post Palantir. So I basically just followed what Palantir was doing. And also, I really believe in Vlad as an entrepreneur. This is just another kind of chapter of where I am right now. I'm CEO first, company's business idea second
Nice.
right now, and I'm coupling that with TA. But this was a really good winner. We have a 50.39 in the account. So I bought it like right somewhere in here. Yeah, like this flag. Yeah, and we're just trailing family count. I sold mine because I don't know what it was. It was just I broke my rules and I just sold it. I was supposed to be trailing the 50. I was supposed to be holding it for a year actually. So now I'm gonna kind of a double whammy. I broke my rules and I'm gonna have to pay more in taxes. But that was another one. SoFi is the same. So I own SoFi. Right now, I'll just give you. Let's see how many positions I have open. I have 17 positions open. So SoFi, I have a 1530, but it's another one of the April lows setups. Same idea. Um, Sold off, move up, first flag. So it was the first flag after a sell-off. So you have like this downtrend. If you look at the MACD, you have an uptrend. It's a bear divergence or a bull divergence. So I already saw that forming. I'm still kicking myself. I should have been fully leveraged in that period. I'm nowhere near that, so I missed. Like my performance against the opportunity set, I'm still kicking myself. And the only reason I've been able to give myself some reprieve is because I just have never seen this before. I've just never really seen it before. I've never really traded it. So like I didn't really have the chart history for it, even though in hindsight I really did and I should have known better. That's why I'm treating this kind of period right now similarly. Uh but yeah, anyways, it was like this downtrend and then it pops up, makes a big move up. So it was like 70% move in 22 days, right? Like I want to trade stocks that move quickly. make a big move, big linear moves fast on tons of liquidity. I mean, even right now, and SoFi had an offering this evening, but even right now, I mean, it's trading $1.8 billion a day, and it's moving at an average, it has an average range per day of 6.2%, right? Like that's a pretty volatile liquid stock that has a history of making really big linear moves. Like, and I say this in the chart talks, and this is really for anybody who hasn't listened to them. I want to trade stocks that respect technical analysis and that are what I say, like kind to traders, right? Like, they should be surfing moving averages. They should be breaking out of wedges and continuing, right? Like those are the stocks I want to trade, and they have a history of it. Uh, and so like that's naturally why SoFi was on my list. It's tons of liquidity, tons of range, treats traders nicely historically, and they got a good business. So it broke out here. I didn't buy it here. I didn't buy that first leg. I waited for this first flag. So the moons are all kind of aligning with this setup for me from a technical perspective, where we have this sell-off, but we have this bull divergence on the MACD. So you can see like it's legging down, 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 and then the MACD is moving up. That's essentially telling you that momentum is shifting. Even though price is still declining, momentum is shifting. Uh, so yeah, it's kind of hard to wrap your head around, but in a low liquidity stock, it doesn't take a lot of power to move it, right? So when momentum is coming out of a stock, even though price is still going down, it doesn't take a lot for it to reverse, like from a buying perspective, right? And so that's why these divergences they just help me with timing and kind of seeing what's going on under the hood. Um, so I basically aligned the divergence with the downtrend break. It breaks, and then it builds what I call a first flag setup. And Pat, this is what you're asking me, like what would be like one of the first setups that you trade? It would be
Yep.
this. It would be a break of some big range, and then it builds a flag, which is a big move up, a pullback, undercut, consolidates. You can kind of draw like a very obvious line, and we'll come across some other instances of like easier to see flags. And then we can even go through a watch list that I built, if you want. I mean, I don't know how much time you guys got, but we
All
can
time
go
in the
through my
world.
watch list tonight too. What I have actionable, because I do have some names that are actionable for tomorrow. Uh, but anyways, yeah, flag, and then I bought it somewhere in here. Let's see. I'm trying to pick ones that like aren't open. Yeah. So
This was so textbook. This opened this first in mid August.
yeah, yeah, we can look at that. So let's look at it on the weekly. Nope, let's go back to the daily. So one thing that I really like to look at is not just how linear the moves are for longs, but also how linear the moves are for shorts. So the most linear stock of the year is AEVA by far. The cleanest price action, the biggest move, the less stress on swing traders. BitF is another one. What I mean by like linear, like clean moves is if you were to look at the open and close of like five candles in a row, are they like marching in the same direction or does it chop around? Like if I'm short, I want to see a bunch of red candles and I want to see like a tight channel essentially. Like you don't want like a wide chaotic channel, right? Because that's choppy. That's how we define choppy. So if I'm looking at this sell-off with open, I'm like, man, it's getting tighter and tighter and tighter. It's a VCP to the downside, right? And then if I look at the MACD, what is it doing? And this is great because this will walk through the chart progression and concept that I've kind of come up with. A little allude, I haven't read any trading books at all. All I've done is look at charts and watch all of Qualamagi streams. There's so much content there. You really don't need anything else. If anything, I just looked at Qualamagi. I saw that he made 50 to 100 million bucks. What he said, I believed, and so I ran with it. Okay, like that's what it takes. And I just kind of soul read him. So there's probably another term for chart progression out there, but essentially chart progression to me is the end of a cycle. What are the conditions that lead to the beginning of a new cycle? And then what are all the technical analysis patterns that happen until the end of that new cycle, right? So like the first setup or pattern that happens every single time. 2023 lows, here lows with open. It happens every time. I call it the divergence pivot, where you have a MACD divergence, um, where you have the MACD trending up, but price trending down. That's a divergence in price value to momentum. And then it breaks out. So like this is the first setup. So it's a divergence pivot. We pivoted from a downtrend, this eternal death downtrend. That thing literally is down to 40 cents from like IPO. Like it's just miserable, right? And we're seeing so many charts emerge from the depths like this, mind you. But it just erupts on insane volume. Uh, Eric Jackson, uh, the new what's his name? Hello Kitty, Mr. Kitty, the GameStop guy. He's I love him. I know people hate on him. I just think he's great. I think he's hilarious. He's like this washed up banker who like is now puppet stocks on Twitter, but like he's doing a great job at it. I think it's awesome. But anyways, I forget exactly how the first legs start. It was something with him coming out saying I'm the CVNA. Uh, I bought CVNA at Lowe's and I held
Yeah.
it for 10,000% or whatever it's at. I hate that stock. Um, and he brought his prowess from CVNA to here. So it breaks out on I think Eric Jackson news, and then it flags, and then it just rips. I did not get a trade on the front side, but I did short it with some good size. And this is a great example of a parabolic short, which is in my playbook. It's something that it's a setup that I get to trade not very often, but when I do, it it's pretty predictable. Um, and then it pulls back, and it doesn't really lose much more than not. I think it maybe dipped 50%. Um, from like the big move, like the big breakout, which is probably like this candle to here. So that's 400%. So then I think it came down. Oh, it came down 66%, so a little bit more. Um, but I just look at this as like big move up, pull back, and it built its first flag. So it's the first flag out of the divergence pivot. So this is the second setup in the chart progression of a turnaround story. And then the CEO steps down because Eric Jackson squeezed her and shamed her so hard online. Like the story is so funny. Like it just kills me. But then like all of a sudden they put this builder in place. Uh, his name's Kaz, Canadian Kaz. Follow him. He was the COO of Shopify, a very successful tech giant. I've seen him do interviews elsewhere. He's just a real sharp operator, a systems guy. So as soon as I started learning about him, I'm like, I know you. I know you. You're the man. And I also looked at, oh my God, what if Open could really tokenize real estate and revolutionize how real estate is transacted? Because it's just such a disruptible place once you can get around the red tape, right? That's around real estate. So me transitioning to an investor, which started at the beginning of this year, uh, I started looking at Open really, really closely. And I was able to couple some good entries with my technical analysis. So there's another setup in the chart progression that I call a PW and R, like PeopleWish, PW, UNR. This one's kind of sloppy, but
P-Dub?
P-Dub. Yeah, some dude like didn't want to type PeopleWish out. PeopleWish was an automatically generated Xbox Live gamer tag when I was a kid because I was an absolute monster at Halo, and it was like the first kind of like name. It was like a name generator, and I just ran with it. I'm like, oh, this sounds unique. Let's go with it, and it's just kind of stuck. But yeah. Anyways, like the PWNR is where price undercuts a significant level, right? So it was like this gap level. So price undercut it. It corresponds with this like left side peak where price tried to make a new high and kind of break out of the downtrend right before the end of the year. And so you have this like really clean horizontal line that you can draw at 250. So I would change it to 250. And I was able to play this leg fairly well. So I bought this expansion candle. I think I didn't hold it too long. I think I sold it somewhere in here. Just I don't know why. but I got long again through one of these other ones, and I got my real big size on earnings when it sold off because from my journey of understanding what open is and what it could be kind of started here. It took a while for it to evolve, and I'm kind of just paying attention. And I saw this panic flush after earnings, and like I knew that their earnings were going to be terrible. Everybody knew that, but Kaz's first webcast, which I watch like I watch a ton of earnings reports. I watch every day of earnings season. I'm watching and after hours. All the reports come out. Like it's just something that I enjoy doing. But especially I wanted to watch his because I'm like, it's an earnings report. They don't have any earnings to talk about. They characterized it as a town hall meeting, which I've never heard before, and it was going to be the first hosted on Robinhood. So I'm like, oh, this is going to be interesting. And as soon as Vlad came on as their first question when they opened the lines of questioning, and in the background, like in the chalkboard drawn behind him, there was like a roadmap to like tokenizing real estate. I'm just like, and I'm seeing this thing sell off. It's down like 20%. I'm just hammering it. And this was a really good instance of me buying a setup called a bottom pin reversal. They don't really happen very often, but it's like an oops reversal, I think you'd call it. And so I loaded it up. But yeah, open. It's been an okay trade for me. I don't really have a lot of P&L on it on the year. The best trade was actually that parabolic short, but now I'm sitting with a $50 40 cent average, and I have some really nice size, and the chart looks bullish, and there's a great theme behind it. So this one I'm looking most forward to the continuation into 2026 and beyond, and hopefully I'll be able to hold this one for years. I mean, that's really the idea. Uh, I can keep going on through charts and just like explaining my thoughts
Hell
there if
yeah.
you want, but
Hey, would Chime recently be an example
dude,
of the divergence pivot?
yes, yes, perfect. It's a beautiful too. It's so linear. Um, Yes, uh and a really great one because oftentimes you'll see divergence pivots like plug where you see them happening forever, right? Like you can see the MACD trending up and you're like, "Oh, there's a divergence pivot." But there's been one for like 2 years behind. Like it's like and the degree it just starts sloping up more and more. So people like right here. Like it's been trending up for 2 years on the weekly, right? Like price range has gotten much more narrow. Um, the selling momentum to the downside is easing, and you can kind of see that's the divergence. Uh,
Mhm.
but sometimes you can just kind of get tricked, and there isn't really a clean transition from the downtrend out. Plug had a decent one, but Chimes right now is pretty clean. It's a new IPO. Aren't they? They're like a fintech startup, right? They're kind of like SoFi.
Yeah, they're kind of like SoFi. Yeah.
Yeah, yeah. Okay. So you have a really clean downtrend. You have a really clean MACD. You have a pop up, a pullback. I wouldn't have been able to buy this yet because there really isn't like a first flag or anything. It's almost like you got like a downtrend, then a mini downtrend. And now though, we see some momentum. Like there's momentum, there's volume coming in. There's no setup here for me yet. I would want to see like a pop, like on some news, like give me some sort of catalyst, something or other, and then like give me a flag, let some moving averages catch up. And let's see if it can hold up through like the next few weeks or so. Uh, but I mean, I don't know. If you already had conviction in the company or something, I mean, you could have bought it today, I suppose, with everything else breaking out. It is running into an overhead moving average, but I mean, I don't think that the 100-day SMA is being tracked by any market movers right now. I mean, it literally just started. But yeah, it looks great. I think they're in the right space. This is definitely one to watch. The liquidity is increasing tremendously. It was really thin in here. It's trading like 30 million a day or something, but it looks great. It does look great. What other stocks? Do you have any other stocks? I like this
No,
one.
I was just seeing that and that divergence pivot that you brought up and
Yeah, good eye. I mean, yeah, I mean that's exactly right.
um What do this is more curiosity. What is some historical examples of the PWNR?
Oh, I got him. I can show you the first one I ever took,
Let's go.
DraftKings, which is a total turd. Okay, so you know how like just a couple of minutes ago I was talking about stocks that like treat traders nicely? This is not. This is what I
This
call
is
a this is a chaos chart where there are no sustained trends for more than just a couple of weeks. It's just choppy behemoth. People don't know what to make of it.
made one good move back coming out of the bear market.
Did it? Well, 23 lows. Yeah. Yeah,
Yeah,
that was good. So actually, let's see. Let me see if I can spot it. Okay, yep,
and
right.
in 2022, I mean, after the this was a SPAC, I think it was a SPAC.
I'm not sure how they
I
came to
might be kidding
market.
you.
Okay, so that's it. Okay.
Maybe it
So,
was a direct listing.
okay, so this is the high volume close ignition candle after earnings. So you see this big
Oh,
green
I see
candle.
it.
Okay.
Yep.
So I bought it this day. So there's
Nice.
this stock market speculator by the name of Gil Morales. He's a perma bear. There is
He
some
is a perma
in
bear, isn't
him,
he?
but I don't think there's any left in his black heart. Uh, though he does understand market structure very well. He's a very unique individual. He blocked me a long time ago on Twitter. Uh,
Same.
but he did. He blocked you too.
Yeah.
That's hilarious. I've actually sent him letters, like electronic mail, to have him unblock me so that we can talk about bearish stuff when it's time to be bearish, but he did not oblige. Anyways, I learned this concept from him of a moving average undercut and rally. It's essentially price is breaking down. It's losing a significant moving average like the 50-day or 20 or something. And all of a sudden it price just bounces right back up, reclaims, rips higher. Right, that's a sign of like this thing was about to die, but somebody stepped in and overwhelmed sellers and is taking it higher, whether on narrative or something, I don't know, but it's just a really strong sign, right? And so I have learned all the different variants of undercut and rally on my own. Undercut and rally is a broad term, just I define undercut and rally as it's very simple. It's when price loses a significant level and reclaims it, right? That in and of itself is not a setup, it's a category of setups. So I have PWNR, which is the undercut and rally of a left side peak, which you can
Okay.
see here. I have the classic UNR, which is more of the Gil Morales UNR, where price loses the low of some high base. Like imagine a high multi-week flag price breaks down below it, but it has a significant level. Okay, that's the undercut of the base low, and then it reclaims it. Okay, that's more of a classic Gil Morales moving average undercut rally. And then there's like a couple other nuanced ones, like an earnings candle undercut and rally, which this one just so happens to be. This one's actually all three of those combined. So I'll show you the P-dub-ness of it. Uh, P-dub is when there's a significant left side peak. So I always look left, always. So I start from left to right. And I'm trying to see what sort of like high important levels there are. So like here, when price tried to break out and it just fails miserably on earnings, like, okay, institutions stuffed DraftKings here. It gaps down, it goes into this, quarter long kind of death range, right? So that's a very significant level. And then we have earnings next quarter. We reverse the close here is another, and the high is also another significant level, right? It's like a battle of these two opinions. So they coincide. All right, we can draw a good level there. And then you have like the low of this kind of flag thing that was setting up, and everybody was probably getting pretty stoked on that broke down. So that's the classic kind of Gil Morales sort of level where you have like this base low, price breaks down below it, finds support on some slower moving average. So we have all the moons aligning here. I did not know of what I just explained. I didn't think about it like that back then. The only way that I thought about it was an undercut of a left side peak. So that's the PWNR. This one just so happens to have like three sort of UNR levels. And then all you do is you just buy back through your line. That's it. So I just marked the line. I saw it got real tight here. It found support on this 100. It's surfing. all the moving averages are sloping up. You also have this downtrend line. So you have like all of these you have these important levels and a very easy to define range converging. And so like at that point where price gets tight, right? Like I know that if below my entry, essentially by like a couple, not even a dollar more than likely, like that's my stop out because like it can't go below the 100, right? Like, it can't go below it. Like this is dead. So you have very low risk and you have a lot of symmetry here. So this was the first one I ever took, but there are a ton of them in the market right now. Like we were just talking about QS.
See what you say it again about this the stop that you just said. Sorry.
So like a very tight stop.
Yeah.
Okay, yeah. I mean, generally speaking, I want to get my money in as close to where I'm wrong as possible, right?
Mhm.
So I want so like that's the idea with all setups. So all setups should have a couple of things in common. They all do the same thing. So if we look at setups as different types of clothes that we wear during different seasons, so like you're not going to wear like a parka during the summer, right? So like you're not going to be trading short setups at the 3 years into a bear market, right? Like it just doesn't like, so you have to be kind of conscious of where you are in the chart progression. Uh, like similar to like you got to know what the weather is outside to like learn,
Mhm.
to know what to wear. Um, but yeah, all setups should have the same thing in common, which is deploy capital where uh where price is most likely to move quickly away from your average and where your stop level is not where you lose enough money, like you lose money to feel uncomfortable, you just sell. It's where legitimately the formation or the idea is null. It's broken unless something otherwise changes. So yeah, that's kind of like where how I deal with thinking about setups generally. And every single setup in anybody's playbook, if they don't have those two characteristics, like you want, like nobody wants to buy a stock and just like sit with like price action near them. Like the most uncomfortable times of being in a position is right when you enter. That's the most uncomfortable time. And then right after you sell. You always have regret after you sell. I don't care where you are. Like I literally up 150% in Robinhood and I sold a month or so ago. I'm still like pissed. Like, how you're up 50%. Like it ballooned to like 20% of your account. Or not that much, but it ballooned quite a bit. It's like, but I'm still mad, right? Like, and that'll bring me to one principle that Mark Minervini said, and it's the only thing that I like he said. Uh, and it actually led to a criteria in my setup in my system where I sell 50% exactly. And because if you sell 50%, you're going to be equally dissatisfied. If you hold more, if you sell 70%, you're going to feel regret. You should have held it longer. If you sell less and the move goes against you, you're going to be like, man, I should have sold more. I let it all come back on me. So 50% is the perfect point of like emotional balance when selling. For me, Mark Minervini taught me
It's a
that
good
one.
it's a good that's a good point.
Yeah, yeah.
Um okay, so with the stop on that your stop is if it goes back below that line, if your trigger's at 36 and you buy 36.01. I know it's a little bit gray, like 35.98, 2 minutes later, you're not going to necessarily sell, but you see what I'm getting at?
Yep. Yeah. Let's look at like GEV today. Okay. So GEV I took a couple like tiny longs and I got stopped out of, no point in mentioning. But it's like, is there a line in the middle of my screen? Like it's not rendering properly?
No,
Okay,
no, it's
cool. I
good.
think it's just on mine because I have like different window sizes going. Let me move this, get the daily over here. All right. So already I knew that I was going to buy GEV today over yesterday's highs. Just draw this line a little better. So it was 609.50 basically.
Mhm.
Um, so on my intraday charts, you see like these short horizontal lines. This is one thing that's really important for my system and getting like really good low risk entries is I plot daily moving averages on my intraday chart. One of my so like a daily breakout setup, okay, that's great. All right, you see it, but how do you actually enter it? So I have like two kind of criteria sets. One, how does a stock get on my watch list? And then once it's on it, what has to happen for me to enter? So there's like the daily setups that are in the
Mhm.
playbook, and then there's like the intraday entry setups. And so here I just bought through the line. It was just a breakout, right? Like I have this big flag that's breaking out, albeit sort of choppy one, but we talked about it earlier. I have a little bit more conviction behind it just because I think we need more of what GEV offers from a business perspective. But here, I just bought it through the line, and my stop would have been not low of day. So most people would set their stops low of day.
Yep.
My stop would be a close below the 5-day SMA. Uh, and this has just been kind of an evolution in thought for me over time, where if there is a significant daily level just below the perceived significant daily level, you should probably use the one that's slightly lower. Uh, assuming that you're not oversized. And one thing that allowed me to really catch up from missing all the April lows setups and breakouts was I started using previous low of day in a lot of these setups.
I was
And
going to ask you about that. I think there was a period earlier this year where there was like a lot of volatility around some breakout areas and a lot of low a day stops on like the breakout days were getting taken out.
I was
And you
getting
had
wrecked.
posted about the previous day low. Yeah.
Yeah, I was getting wrecked. So I would just think I know that as a swing trader, like when I enter a position, it's not like I'm making money. Like I don't get paid until it's realized. And I know that my objective for most of these stocks that I'm trading is not to get paid in 3 days or 4 days or 5 days. I may take a little off, but I'm not really going to like consummate the transaction in totality, and I'm not going to realize it for months. Like that's always my thought getting in. I need to let time pay me, not size. So I size down and I'm holding things way, way longer. So and it's hard to kind of grapple with and commit to, especially if you're young and want to make money fast and you see people flexing, stuff online. Uh, like it's really hard to like mentally kind of get with, but that's where I'm at. And I'll tell you, your life, your life and your wife will be much happier. I promise you. So yeah, I mean that's just like because like all right, let's just Braco, let's take your example of using previous low day, right? Like if I had a 5% position, um, and I bought, let's say today's breakout, and I used previous low of day, it would like price would have to crack the 100-day moving average, the 5, the 50, the 10, and the 20, and previous low of day. Like at that point, structure is just obliterated. It's a big, like, failed breakout candle. It's like very obvious that it's no longer intact. And if you have a 5% position in my entry, let's see what the average is. My average is 618.11. So I actually bought it a little higher. Oh yeah, I bought it when it pulled back. Um, if you were to like give till yesterday's low, which I don't even think you have to because it's not just going to barrel through all these, like you're not going to let it barrel through all these moving averages. But let's say you did. That's a pullback of 6%. So what is that? A quarter of your account? Like your stop is 0.25% and you're giving it that much range. It's just, right? Like so that's why I was able to start. I took smaller size. I'm not going to make as much, but I'm going to hold it longer, right? And that's just where I'm at in my career. A year ago, GEV would not even be on my scan. I wouldn't even be looking at it, right? Like I would be trading stocks that have 7-day average ADR or 7 ADR and greater, and I'd be trading like $50 million average, right? Like I'm trading the craziest, highest momentum stocks like Quantum, which I traded Quantum, obviously. This is actually kind of a crappy chart. Um, like overall, like
But it
I'm not very
speaks
happy
to
with it.
it speaks to kind of that philosophy that mentioned earlier about the investing that we even talked about this before we sent the link out is about the critical nature of the industry that they're quite frankly dominating right now.
I just want to deploy capital in names that I think I can hold it for a year. Like that has now become one of my kind of founding um like if I were to look at my checklist of like, all right, how does this name, what are all the things that have to be true for this name to get on my watch list to be executable? Like one of them is, does it have the potential for me to hold it for a year from here? Like
Yeah.
that is one now. Uh, and if the opportunity has a low ceiling, then I'm not very interested. But on the flip side, I'm not going to be holding a parabolic short for a year. So if an opportunity also can compact the potential reward in a very short amount of time,
Mm.
it's literally just, everybody you hear people say opportunity cost, but that's truly what it is. And then relative to like your stress tolerance and
Yeah.
stuff, like GEV has an amazing history of trending well, treating traders really well. I bought it. It failed to break down here on 11, wait,
It's
no,
a
what,
good.
9/11 breakout when the whole market ran. This was a really great trade last year. And it ran, I can't see it because the text boxes or the video box is in the way. Let's see, I think it ran.
It's like
Yeah,
120, 100.
120%, but
Yeah.
like on just a no stress trend, like this is what you want. I can show you the what I think is the best swing trade of the year, AEVA,
Oh
and I
man.
studied this one in depth. Uh, so like one huge difference between this chart and like GEV is look just how orderly the candles are. They just look polite. Like I call this chart art. Like I'm gonna print this and I'm gonna get it framed and it's gonna hang like in the hallway leading to my office. Like I'm just gonna drape my home walls in literally pieces of artwork that I consider artwork from this sell-off. Like look how linear. It's just so respectful of bears. And then it's the bull's turn. It breaks out and just look at this move. Like, and so like that's what got it on my radar. I actually missed this trade. Like I missed it both times. I didn't make any money on this trade at all. I even missed the short, which is an amazing short setup that I learned from Christian Kulamagi as well. I missed it as well, but I'm just like a bystander and in awe of how great this is. But it's the whole chart progression like perfectly packaged into one setup. And it's just so clean. So it has this big move up where there's literally no headache at all. Like it doesn't even look real, right? It's real and it's on volume and it moved 140%.
Not
So
only that, what the
yeah,
market was doing, well, like the Nasdaq was doing at the time that it was making that first move, is insane in comparison. That's after the first March low where the Nasdaq fell another 15% into the April lows.
right. So it has all that relative strength, right? And then as soon as things start to turn up, it just erupts. And then it forms like a picture perfect flag. Like you really couldn't make this up, like how beautiful it is. And then it gives you like it doesn't break out, fake out, nothing. No, it actually like continues. Like I don't really want like it sucks when stocks break out and then they come back to your level just a couple of days later and you just gotta sit there and kind of grit and bear it. That's why Pradeep sells day three. That's why, Kolamagi will take 50% off between day 3 and 5 because, that first expansion, is usually I don't even want to say usually, but there's usually a large move that comes out of that initial base break or whatever it may be. And so, putting money in your pocket, paying yourself. But really, I think what's more important is you've now de-risked. Your P&L fluctuation is not as much. You've not only financially de-risked the position, but you've also emotionally de-risked the position from yourself making bad decisions because you can't handle a pullback. So selling 50% day 3 or 5 is great. But here it just went straight up. Like another, I don't even know what it was. Probably another 150%. Yeah, another 130, 40%. Then it pulls back, builds this little pivot, and then it does it again. Like this was truly the best trending uh like mid account swing trading setup in the market. And then to the short side, equally as linear. Like it's just such a picture perfect, what I call a three-day bounce short. And it did it twice. And this one really broke down. It's basically where you have a big move up and then you have like a kill candle. So SMCI, MSTR, AEVA, they all have this sort of kill candle. And then you get like this relief bounce, right? Like 3, 4 days. And then you just short the red to green move. And usually sometimes this Christmas tree all the way back down. But usually it takes a couple instances and the second one. But man, look at this short. Like, look how linear. So it's linear up and down. It's a spectacle of a stock. So like, okay, now it's established, just beautiful chart history. It needs to go sideways for a long time, set back up. But now that it has this chart history, it's one that I would look forward to setting up in the future. Another one is SOUN. SOUN was last year probably the best momentum stock, gave the most opportunities, which I nailed this one several times. But I mean, even down in here, it was a huge downtrend. It pops up on news. It's a beautiful flag. It didn't give you nearly as much hold opportunity, but still, it ran 100% a day, probably on 2 days on multiple $1 billion of volume. So that would be like an example of like, I don't know. I don't think I can hold SOUN for a year. I don't even really know what they do. But what I do know is it's respecting just the technical principles that we abide by. Like, the last thing you want is to like base your playbook on historical patterns that have led to big moves, and then a stock just not respect those. Like you don't want to be involved in those sorts of scenarios. Uh, I call them like chaos stocks. Like they just don't follow the rules. This was an amazing move by SOUN too.
I have a quick question. This is kind of based off a question in the chat from earlier, but like a GEV, for example, you talked about, you're interested in stuff that, you think you can hold for a year.
Yeah,
So say something like GEV goes to $1,000 in the next 6 to 8 months.
yeah,
How are you going about managing that position once it makes that kind of big move, as far as maybe selling any into strength or
yeah.
trailing a stop somewhere on a larger time frame?
No, that's a great question. I mean, I'm pretty new to this too, and I took this approach from Stanley Druckenmiller, where he is a technician first. That's what he famously says. He's quoted as saying, and then he's kind of an investor second. And so, like, I have like this little notion in my head where it's like, we need more power. We need more power. Like, we're nowhere near it. Like, I've ran math and I've looked around. Like, okay, we need more power. All right, GEV can help solve that. Like, they're a major contributor to that. And um, so like that's enough to get me into the trade. So I'm in it. I have like a 6% position, maybe like seven or something. Uh, and so I'm now like I'm first and foremost, I'm just gonna pay attention to it and see if it moves away from my average. But if it really starts trending, that's where I'm gonna dig in a little bit and just start learning about it more. I mean, I don't know if I will be able to hold it for a year. I have no idea. But I think the prospects are there. And I don't have a like big enough size to really require me needing to get a ton of conviction to try to hold it for a year. But if it goes up 100% and it were to, you know, close under some meaningful level or some news were to come out and I just hadn't had time to get around to it to establish conviction in the business to kind of override that, I would just sell it. But right now, I look at it as it's like a pilot position in a way. I'm in it. I had capital to deploy. It was a good technical setup. I know that there's tailwinds, and
Yep.
I don't understand it very well, but now I'm in it. I'm going to see it every day, flicking around in my portfolio, and so I'm going to sit there and I'm going to learn about it. And I kind of took this approach from Stan. Now there's other instances though where like open, when I saw it flushing, I knew I just wanted to buy it. I'm not buying open. I'm buying CAS and CAS's ability to change a company around. Actually, not. I mean, honestly, revolutionize an idea. That's what I'm buying there. But here, it's this is a very weak idea for me, and I can tell you what I don't like about it. It's up a ton. Like it's up so much. I don't like that. I don't like that this upper base is still kind of gross. Like it's choppy. There's a couple huge rejection candles in here, and it's not the prettiest. I
Yeah.
would not be surprised in the slightest that I get stopped out, and it's whatever. But I had it on my list. I had a line. The trigger hit. I executed. That's what I did.
I mean, you
Uh,
perfectly explained Druck's concept that he learned from Soros of invest and then investigate,
is
right?
that
You
where you
have
got it? Okay.
yeah, it means an idea, starts off small, like a pilot position, like you said. And then, if you start to get positive feedback on it, you dig in a little more, and then maybe it becomes something big. Maybe it doesn't, but, yeah.
Yeah, I don't know if I was drawn to that because it like it enables me. It enables me to
Yeah.
kind of keep I'm trying to break old habits now, even for myself. Like it's when price closes below the 10-day and I don't sell, it's like very hard. Like it's equivalent to like a day trader holding a trade overnight. Like they're like the one time I, held overnight, there's an offering. I'm never doing that again.
Yeah.
Like for me, it's like, thought I should have just, why did I hold it past the 10? What, like, but I'm trying to break old habits as well. And I think that maybe like, Stan coming out, managing billions of dollars saying that like, yeah, I'm just buying a setup for it's like I want to believe it, and it makes sense. Kathy Wood should hire a TA. I think that she'd get much better averages.
I
Maybe
think she has some. I think they just suck.
yeah. I mean, you could hire some kid to build you like I actually want to build a bot where, once I move even more towards like investing and TA becomes less of a concept or less of an important thing, where I just say I want to accumulate X amount or I want to allocate X amount of my available capital to like this stock or this basket of stocks. I would just deploy it to the bot and the bot would, whenever price dips below X moving average, allocate. And it would
Mm.
accumulate over the course of months, right? And like that's kind of how institutions do it. Like big institutions aren't really like there's not some kid at the desk buying shares for them. Uh, so,
So
and it also just sounds way easier. You
that's
don't
an
want to
interesting topic.
yeah.
I mean, that's probably going to change the markets, and because what you're talking about is going to, in some form, revolutionize the movements in price, um, to shift more to, I suppose, of automated AI market participation, more so.
I don't know if you want to go down this path with me. I've thought,
I don't know.
No, I don't know. We'll get
We'll
to
save that. We'll save that
I
for a phone call.
yeah.
We'll save
yeah,
that for a phone call.
I have a good question from earlier in the chat. It was this was from Dark. He said it seems he trades with much fewer big ideas than a lot more trading than he used to. What methods did he have to quiet his mind down and to prevent himself from over trading and taking many small trades? Was there an epiphany or turning point for him to make that change in his trading?
I'm a chronic overtrader for sure. The biggest thing for me was if your average position size is 10% and you want to click the button, 1%. Like even if I just start a small account, do a side project. Like me, I have insane, I don't know if I have ADD or not, but I probably do at some level. And I'm sure it's of high degree. And I got to be doing something. If I'm staring at charts, my hands on that mouse, I'm flipping and clicking, right? And I mean, not that extreme, but I do come from a place where that's where I started. And I think everybody has to kind of battle with that demon. Everybody has it, and you all have to find your own mechanisms for calming it. Uh, for me, it's just do other stuff. Or if you want to trade something, it's like just take a little small size in something. I don't know. Start a small account. Uh, but like you don't want to jeopardize your nest by breaking rules. So like if I were to just start taking random trades with uh the rest of my system intact, that's a real quick way to get wrecked and ruined, honestly. So, if I'm taking random trades, like if I just want to click the button, I want to buy, some setup or something, which doesn't really happen like very often. But if I do, I'm taking super, super tiny size. Uh, and like I just may have been like I already may have broken my rules for the day, and I'm like looking at other stocks or something. I'm like, that looks great. I'd like to own some of that. And I didn't think about it. It's like breaking out through a level that I see. Like I don't have any conviction. I might slap on a few shares or something, but like that rarely happens. My whole approach kind of filters all of that out. Like, any of you guys like are in Discord or have like your Twitter up or whatever, and you have all these kind of like opinion feeds. Essentially, that's what they are. People saying they're doing these things, people in all sorts of different manners all throughout the day. It's like this, whether whether you think the actions of those people are significant or not, it feels busy. Therefore, you have to feel busy. You got to feel like you're doing something. So I think silencing that, unless it's a part of your system, uh, silence it. I mainly broadcast. I don't really like consume any of those feeds uh, because they're very different. Like Short Bear is a great example. Anything that he says, for the most part, like I'm going to enter a trade or whatever, like it is not even remotely in my playbook, like at all. So like I'm not just going to go buy it, even though like I probably would let him manage my money, honestly. Like you probably
Yeah.
could. I'm just not going to do that, right? So like I try to filter out all the noise. Like like my ultimate goal is to if it if the information is not critical to making a decision to deploy or retract capital, it should not be entering my workspace, my consciousness. Like when I'm there executing, there should be no other stimulus that can deter from from my system that was derived from historical patterns that have repeated themselves forever. Like I don't care what Trump says. I don't care, even though I listen, right? Like I'm a voyeur in that way, like I'm listening, right? But like I've done a really good job of making sure that it doesn't impact my decisions in the market. And I think that's something that needs to kind of be earned over time. Like I think that like if I were to if I could have it my way and like take like a little clone, of me or someone and like that like I could literally put them in a box. I would put them in like a box. Like if I need to like create like a super soldier of a trader, like it's like okay, you're going in a sensory deprivation chamber and nobody can call you. Like you're going to be well fed so your tummy doesn't rumble. You're not going to be distracted. There's going to be no Twitter feed. There's going to be no nothing. You're going to have a single chart. You're going to have your alert set the night before. And when the price goes through that line, you're going to buy it and you're going to put your stop at the premeditated level. And then you're going to take it off your screen. You don't look at it. You don't talk to it. You don't go back to it. It does not matter anymore. Does not matter. It doesn't matter. Why does it matter? You deployed your capital into the setup. What are you going to do? Look at it? You're going to breathe on it? It's going to go higher? Like, no, no, on to the next. Okay, next one triggers. Great. And then once all of your capital is deployed, you have no more to deploy, or there's no more triggers, you're allowed to leave. And then you come back the next day. You have stop set, you have alert set. You come back the next day, you're done. Like, that's how I think about it. And it took me a long time to get there, but that's what I think helped me get, kind of to the level of thought that I'm at now. Like to me, that's the epitome of technical analysis, where nothing else matters other than the definitions based on historical happenings that you have kind of pieced together and superimposed on your daily life. I mean, like that's all that matters. Now, if you want to start like injecting like economics and whatnot, like tell me how do you systematize that? And remember, my objective was just to squeeze money out of the market in the beginning. It was just to make money. Like me, I'm not let alone I have to learn how these candlesticks move around and like how like news impacts things and all this other crap, like the basics of trading. Now I have to be an economist. Like that's just insanity to me. And in the beginning, I thought technical analysis was just serious voodoo until I saw this kid making millions and millions of dollars day trading penny stocks. I was like, oh, it is real. Repeatedly over years. Um, and then I saw Q, like Christian Koulamagi will be a billionaire. He will be a billionaire trading stocks. Like I would bet anything, unless he just, like loses his mental faculties or something, like he will be a billionaire. Because his system like can scale there. And it's not even a stretch. It's not even a stretch. He's proven that he has discipline. He took mall cop money, 5 grand to 100 million over 10 years. In an amazing market, ups and downs, some shitty stretches, but he did it nonetheless, right? And he's doing the same thing over and over and every year when his account was 100,000. Well, no, he day traded to a million. But let's just fast forward to a million. After that, it's literally the same thing. There's some, nuances and things that he picked up along the way, but he's still doing the same thing. Now his opportunity set is just smaller. He will eventually, if he wants, he doesn't have to do anything. He has enough money to do whatever he wants. But if he wants to keep scaling, he'll have to figure out other ways to gain conviction other than good setups and relative strength and themes and things. they'll have to kind of gain other avenues of conviction. That's like what Lucas is doing, and that's what you'll see. Anybody who wants to, kind of keep progressing, you have to do that because liquidity will just become an issue otherwise. And you don't have to do any of this. Like you could make an insanely great living trading one setup forever. There's this kid in day trader rehab. I've known him for years. He's young. Uh, some of you guys may know him, Lewis. He I saw him blow up like 2 times. He ran a couple grand to 100,000 trading options. He blew it up. Day trading, ran it back up. I'm a blew up. But then he committed to swing trading, and he took a very small account, and now it's multi-million dollar account trading a single setup, literally a single setup, and it's scalable. No joke. I mean, we've the same setup that occurs on uh, this kind of like change of character under counter rally setup that he trades happens in Tesla. And I don't. If you have liquidity problems getting money into Tesla, you got, it's not really. It's a good problem to have, right? But it's the same setup. It occurs everywhere, and you could literally trade it forever, and you could teach it probably to a dolphin. I think a dolphin's smart enough to understand it. It's just the discipline, though, to only do that, and I think that's really where that's his edge. But yeah, it's a cool setup. It's just an undercut rally. I could keep ranting forever. Do you want to, if there are any other questions to answer, though, I'm happy to
That's a
answer.
U. It's a the UNR. Has he named it the Lewis UNR yet?
No, he kept, he's an interesting, uh, young fella. It's called, it's actually a concept online that I had no idea. Because when he first said it, I was just like, how are you about to call it a cooch? I'm like,
Let's go.
you're gross. Like you're just calling it like a cooch setup. And he's like, he was just being silly, but it's like a chooch. Then you start calling it chooch. I'm like, all right, man, what is this kid talking about? And it's change of character, essentially. So I mean,
Gotcha.
it's kind of a combination of like that divergence pivot. So he would like see that where there's like essentially a big move up from a very long downtrend. And he would buy the retest on a weekly. So you have this like big breakout, a big change in character, retest on the weekly, it undercuts some really key level, and then it forms a little flag, and he would buy that flag in really, really high momentum stocks. And I mean, I feel like there was a time last year where he had three or four, 500% winners in his account all at the same time, just trading that setup. He is more disciplined in that regard than I am trading. Like I'm much more I'm more discretionary than he even is. And then if you were to put Ariel on the spectrum, he he's even further because he's kind of taking in so many market components,
Mhm.
market data at a time to make decisions. But Louis was just like it's just like yes or no. Very simple. Mine is like yes or no for 5 or 6 different things. Um, but yeah, yeah. It really just comes down to, I think, um, finding an edge and trusting in it, and then being able to commit to being consistent. That's the hardest thing. That's the hardest thing. And it just comes down to the framework that you think about and you approach trading. Uh, I think in the beginning, like, young kids are very impressionable. Like the fruit doesn't fall far from the tree sort of analogy. And like, if you just start establishing, I don't necessarily say bad habits, but maybe like, the sequence of the habits that you've established or the whole trajectory, like you just kind of like build yourself into a knot that's very hard to untangle. And, if you stay solvent long enough in the markets, you'll eventually figure it out. But I think with a little bit of guidance, people um, could not get in that like ball of wax, uh, protect themselves from getting in that ball of wax a lot better. Uh, yeah, it doesn't have to be that hard.
Hey, I'm curious because I think a lot of traders, haven't experienced this yet. But like along your journey, you obviously ran into some, periods where scaling became a thing, right? There were certain stocks you couldn't trade anymore, just for liquidity purposes, whatever. Did you find over time it became much harder to extract money from the market, or easier maybe because there was much fewer stocks to focus on, and your criteria was a lot more strict?
No, I'm nowhere near that. Yeah. Like I don't have a week opportunity set. Like so I have two lists that I keep. I have one that I call the needs more sideways list, NMS. It's basically
Yep.
like stocks that are forming that could meet the criteria to be executable that I should track. And then I have my daily trigger list. So like it's a list of names that are the creme de la creme that are ready, that are actionable tomorrow. Uh, and right now they're long. Like they're long. And there's plenty like it's like I don't have those issues. But I am 37 years old. I'm going to be doing this for another 40 years. I will. Absolutely. And so I'm planning for the future. And also, I just want to do other things as well in my life. I just have a lot of aspirations in other lanes, other things I want to do. And I know that, look, the markets are always going to be a great place for me to extract or to capture value, to capture value tokens, right? Basically leverage on the rest of the world. And I've kind of created a mousetrap that does it pretty well. Uh, but I want to kind of take that to another level by, and this I think will help me in other lanes, and this is just my own kind of personal allude. I want to better understand the companies themselves. Like I want to better understand $100 billion companies. Like they just amaze me how organizations like that can be formed quickly and how they can accomplish great things. And like, okay, great. Pair that with trading, which is investing. Uh, and like that's definitely going to be that's like my horizon. Uh, but I started as a day trader, right? Like I would much rather, I think I'd much rather start. I mean, obviously I'm going to be biased to my own history, but like being a day trader, kind of coming from like the gutter, like the day traders are like people who start that way, like we all start for the same reason, all the same reason. We want to make money fast. Uh, and like we probably failed at something else to get us here. Like, I mean, that's like usually it. Like something else isn't going that well. Like we think we can make money quick day trading. We kind of get roped in. We're all kind of degens, and like I don't want to say that, but like we probably all have the same sort of personality flaws in a way where it's like, okay, we think we can make money fast. Well, that's kind of easy to sum up and say we all are impatient, right? And you know, going into trading with like the need to make money or the want to make money, coupled with like that kind of personality group is a recipe for disaster. And that's why I think most traders fail. It's just because the tr most traders fail. They not no investors fail. You just buy the S&P, you don't fail. Like the success rate of investors is null. It doesn't happen. Or I'm sorry, the failure rate of investors is null. The success rate of traders is very low. And it's because we come in, I think, guns blazing, and it's
Yeah.
hard. It's definitely hard, but it doesn't have to be. And again, it's really because um, broker we allow people to trade who shouldn't be able to click the button, not without some sort of system or at least some sort of training. And like that's something that I'm advocating for now as a part of my personal mission is to literally prevent people from blowing up. I don't think that the failure rate of traders should be this high. I think that with the proper mechanisms in place, we can greatly, greatly reduce that. Uh, and it's just kind of from more of a responsible approach. I know it sounds corny, like, responsible approach, whatnot, but like really, like we all know, like I've had serious drawdowns. Everybody has. A lot of people have literally lost everything, but we all know like how bad it feels, right? And the stories that you don't hear are the worst, and they're probably in the highest occurrence. So like if we can kind of create a system that more people can adopt to prevent them from blowing up and stay in the markets longer, I think I think that would be heroic and also super useful. Uh, Super useful. And that's kind of like a tip and a mission that I'm on right now. And I know, Patrick, we talked a little bit about it the other day,
Yeah.
but yeah.
And in individually, I know you got a project and your own mission to kind of provide that. But like individually, there are steps that people can take to to increase that, probability of not be or becoming the statistic of the 5%, so to speak, or the versus the 95%. Even just one simple thing. This is anecdotal, but in the group we created a 2025 goals channel. Right. I'm not big on resolution, right? Or the January 1st is just another day versus like do it now, right? Do it today. So we started that, a couple weeks before the calendar change in 2024. One of the most interesting statistics, I went back through and read all the 2025 ones, is there's about 88% of the people who wrote out their goals in that channel are still active in the group. And I thought that was probably the most statistic that I've been most proud of. Now, I don't know how many of them are positive on the year for 2025, etc. Or even made progress on those goals. But that alone was just like one very simple step that you can take to improve your chances of being around in 2027. And if your chances are, if you're around, hopefully you're progressing and learning and growing and hopefully and even simplifying, right? And therefore increasing your chances of becoming the 5%, right, of traders that succeed.
That's amazing. I mean, that's actually really cool. I kind of want to replicate that. Uh, yeah, that's amazing. So people that actually, put pen to paper and publish their goals are still in the room, like 80% of them.
Yeah.
Yeah, I mean, that's really like, I mean, that's the first step. And that's something I suffered from analysis paralysis. Like, I'm not as bad as some like colleagues and some people I've worked with, but still it was a problem. And that's kind of where I came up with like, well, the lawyer, Ken, he yelled at me and he said, just stop, right? And I kind of do it to myself now. But yeah, I mean, it's real. And it's just like, just get look, any plan is better than no plan. It's a start. And all you have to do is commit to one concept and understand it very well, but commit to it and learn everything you can about it. But it's just the concept of continual improvement. And if you just like learn everything that you possibly can and commit to it, you can apply it to literally anything in your life and you'll be successful. Trading, whatever. I want to apply it to the markets because I think that there's so much upside relative to the amount of time we have to invest.
Mm.
Uh, but then there's other people who just freaking love it, right? Like, and I love it, don't get me wrong. But I mean, there's people that truly love the markets. Like, there's nothing to do, but they're just sitting, they love it. Like they could be doing other things. They could be walking their dog. They could be, whatever, building a sandcastle, going to the beach, going skiing. No, no, they love the market.
TSDR is absolutely one of those guys.
And that is fine. That is fine. If that's your passion, that is fine. And that's cool. But you have to establish like lines in the sand for yourself, right?
Mhm.
And it's just like, I, TSDR, love this. This is my life. I'm committing to it. You know, mind, body, persona, everything. This is it. If you clarify that and like everybody around you understands that, then like it's an expectation. It's who you are, right? So there's nothing wrong with it. But I think it takes a while. Like you probably truly love the markets. Like you could sit there and just be an observer and like, not even participate and you love it.
Yeah.
But I think like during a bear cycle when everything's terrible, you'll be sitting there still loving it, right?
A little
Well,
bit less, but yeah.
yeah, but like, yeah, it's admirable for sure. It's just find what you love. I mean, it's hard to do. You got to get out there and try it. You got to get out there and try things. That's another interesting topic. Young people spending all their time trading. Uh, that's an interesting one too. Don't have to talk about that now, but yeah, the commitment to it
Mm.
all. But yeah, I mean, unless you guys got anything else you want to talk about, any other questions, charts to go over, you can take a look at my
Someone
watch.
asked what's on your watch list tomorrow. What are some things you were watching this week?
Yeah, let me pull it up one second. There's not a lot of names, but my needs more sideways list that I explained is really long.
Mm.
Overall, I think the market is going to just I think the market ends up going much higher. Mainly just because of AI and the tailwinds there, at least over the next year or so, mainly from earnings. All the earnings that have come out in the forward-looking guidance has just been phenomenal. And also AI, I mean, if you just think about it like logically, what does AI do? It makes things more efficient, therefore they don't cost as much, which means companies are going to make more money. Now, the flip side though is people are going to be laid off, therefore they have less money to spend, less advertising, and then it comes back the other way. I don't know where it's all going to actually like end up, but that's like I had a breakthrough today in my thought about thesis and getting conviction. The simpler the thesis, like the simpler you can state a strong idea, the better it is. Like Tesla is going to be the robotics leader. Like that's it, right? Like there is nobody else who's going to be they already are the robotics leader because technically their cars are robots. But like it's just like who's going to win the robot race? Elon, right? Okay, that's a thesis. Buy it and hold it. Like very simple. Um, Kind of like the Labu thesis. All right, here we go. Okay, so I have NXT, LMND, and Reddit. I like this ONS too.
Which one? Oh,
ONDS.
yeah.
I don't really like these kind of ascending sort of wedgy things. They don't really lead to there's I found a couple instances where they do work out, but ones like these don't really work out too well in my experience. I'd like to see it kind of pull back a little bit. So like it would do something like this. Come on. And then like kind of come down and chop around and kind of build a bigger range and then break out of a bigger like multi-month sort of flag.
Mhm.
Um, but let's see, Lemonade, LMND. I really like this one. Uh, it has a history of making really big, clean linear moves on big volume. You know, I mean, 180% in 22 days. That's pretty insane. Uh, and it's kind of just breaking out of this year-long sort of base. It did one of those PW&Rs where it undercut this left side peak, and now it's building this really nice flag. Uh, pushing highs. It has a really good look to it. The theme's been good, so I like it. Lemonade's probably like my number one watch. What's the other one? Reddit. I have a hard time wrapping my head around Reddit. Uh, but from a technical perspective, you have again this left side peak. It's undercut it. It's an even number, 230. Tried to break it here, couldn't. Corresponds with this gap level. So you have like all these kind of like high stakes, important technical levels. And then now it's broken this downtrend on a nice ignition candle. You had this, the MACD is trending up cleanly. You just got a MACD cross here, and it's building like this first flag. So that's one thing to like get on my trigger list. You have to be price. Yesterday's close has to be, without getting too technical, really close to the level I want to buy it at. So like, I don't want, I don't want to like if price had to run all morning, it's already up like an ADR, and then it's hitting my level. I kind of don't want to, buy it there. I think about like moves. That's why I call them ignition candles. Like they're like rockets taking off, and rockets have fuel, and rockets run out of fuel. So like, the higher price goes against gravity, and this is the way I think through it. Uh, you know, like the higher probability of it like kind of getting pulled down, right? And
Mhm.
so if the like move takes off like right at open, and it's running for a couple hours, and then it hits the breakout level, um, you know like I almost feel like it runs out of momentum. It has a higher probability of getting stuffed, right? Where like with like Reddit, we're not too far away. So this is kind of how I do it. I'll put you on some game. So I look at the ADR, the APTR, basically the same thing.
What's
It's
APTR?
average percent true range is the same as
Oh, average per. Okay. Sorry.
yeah, daily range. It just I use APTR versus ADR because it considers gaps. And ADR doesn't calculate for gaps.
Yep.
Yeah. So anyways, it broke this range, building this flag. It's really tight and it's pretty close to pressing my breakout level. So if my breakout level is, let's just say, over this high, which is 2150. So that's a nice round number. That's something else that I like to look at. Uh, so this is I haven't even set my triggers yet. I have two of these drawn, so I'll actually show you how I do it. Let me just clear this line. All right, so if my buy is going to be above, what did we say? 22, 31, 15. Then I'm going to, I always like change the line. I have two different line styles, one for buys, one for sells. So this would be a UNR of, I don't know, it's like, I think it was like Q1, left side peak, we'll just say. Show name on the left, dashed. Okay, cool. So like that's my trigger line. I have one line on my charts whenever I execute. Always. I don't like, my if there's data or information on my lines or on my charts that I don't use, then I need to get rid of it, especially when it hits my trigger list, because that's when it's time to like execute and make my decisions. So I clear everything. I have my line, my purpose. I'd put my position size there, and then now I'll just set an alert, cross above. And so I'll buy it when it goes to this line. But like this one's good, while there may be other setups on my list or charts that I'm watching that may fall off because they're just too far away from the breakout line. So like if we open tomorrow, let's just say, I don't know, let's just say here. Okay. We are 2.5% roughly away from the breakout level, but its average range is 6. So that's great. But if we were like one APTR away, that's a little too far. Like I want to be like, that's a tight chart. It's pressing the level that I'm going to buy at, because I know that if it loses yesterday's low, or even like yesterday's close or something, like I'm probably going to be out, right? So, and then the chart's going to break down. It's going to need more time. It's going to need to consolidate more. Kind of like has to squiggle around and then it'll press that line. But this is obviously the relevant line. So that's why I think I had one more. Mm, I like this BMNU, BMNR. I hate I like if I start thinking about the company and what it is, I don't really like it. But MSTR, this is kind of like a see, this is me where I have to kind of talk to myself and say, Alec, where does this fit in with your plays and your thoughts? Like this is like me trying to talk the day trader, what is it, BMNU? Like trying to talk myself out off a cliff. I mean it's a tight chart. It's kind of coming out of this sort of like DP-esque divergence pivot downtrend to play on. I'm not in love with it. I mean, I want to trade charts that are like this.
Yeah, this is sick.
I want to trade charts that are trending. There's a big problem, I think, with a lot of the charts in the market right now, where they have retraced, 70% of their move and they're bouncing and people are chasing them, but they're not all of a sudden just going to, like rip to highs and then just start some super trend again, right? The chart theme that we have right now are like dead cat bounce. We have legitimate UNRs, and then we have stocks like Light in core running and making highs, right? And like legitimate trends. Um, I want to try to position myself in these sorts of situations. Like, let me think, like ASTS today, right? Like this is legitimate PWNR. It undercut this left side peak. It's very linear, big stick today. Like, very easy to see downtrend. Okay. So like I couldn't have bought it today. And I think also a lot of people they see this today and they're like this is bad for mental health for traders. This is a FOMO inducer because there's really no like the thing's sold like it's a dead cat bounce. Now, that doesn't mean that it can't turn into something else, but I would have much rather seen something like this, kind of pause here and do this formation like Hut, or I'm sorry, Wolf. So in
Yeah.
the they're all shitco miners now. They're shitco data centers, but like Wolf has held it's basically hasn't gone down at all, right? So it's kind of the relative strength leader of the pack. While Iron is is not bounced as well. But iron is great. I mean, this is another one of those PWNRs. And, if you start looking into their background and, what they have going as a business, I mean, I think they have a lot of, runway ahead of them. I mean, I truly believe that, especially, in what they sell, there's some scarcity. But this is a legitimate one. Actually, this should be on look, I already set the line and the trigger. I just didn't add it to my list, so I should probably add it. But this one's triggerable. Like I would buy this tomorrow through a line. I don't love it though, and the reasons why is because we're running into the 20. We have this overhead 50. Like I would much rather see it pop up like this, and then like it's gonna come back down, and then it's gonna chop around and build like this flag where it's like a much larger base.
Mhm.
It may rip to highs. I don't know. I mean, I'll buy it in trail, but I would rather see it hold up and consolidate over a longer period of time, being resilient to like Trump's tweets and like other random stuff. Like just prove to me that you're like kind of Trump proof a little bit. Uh and kind of you're like that, like you're beta proof, like, oh, this is just like it's a shit
Yeah.
code Bitcoin miner turned into like world leading data center overnight. Like there was this one I saw. What was the Zcash one? I shorted it. C oh, what the hell was it? It was like last week. I'm not gonna remember. Scythe, maybe?
Oh,
CYPH. Yep, this one.
yeah.
Okay, all right. So uh yeah, I shorted this one somewhere up in there. There are shares available on TOS. But well, where was I going with it? Oh yeah, it's Zcash. Uh
New Bitcoin, you mean?
yeah, new Bitcoin. Yeah, I don't even remember where I was going with it, but oh no, I know what it was. I know what it was. 2 weeks ago, they were a biotech. 2 weeks ago.
Oh,
Like
perfect.
in their news, they're like, like cancer researcher is now Zcash
Yeah, it
treasury.
says healthcare sector on my TC 2000.
I was just like, all right, like this is like a blindfolded double McTwist short. Like it's yeah. But anyways, that's kind of like what I think of like Iron Wolf, Cipher. But I mean they're the difference is they're doing deals with Google and Amazon and Meta, which is just like mind-boggling to me. My favorite though, and oh wait, this one actually looks really good. So like this is actually kind of like a sloppy first flag sort of a setup where it breaks a downtrend, it's flagging, like, and it's tight. It didn't really give back much. This one's also one of the leaders there, but oh, what the hell was the other one? Oh, I like BitF a lot, even though it retraced so much.
Hmm.
The reason why I like it so much is because of this.
The move that it made back here.
And just so clean.
Yeah.
I remember when it broke out of this kind of, flag thing, right? Kind of like sloppy, rounded top flag, but this candle was just like, okay. And then it just didn't stop. And now that it's proven to me the ability to do that, it can do it again. And this would be one that I would kind of want to look into. It's cheap. I mean, it still trades 170 million bucks a day in volume, so I mean, it's plenty of liquidity. But it's a $3 stock. I'd want to look into it a little bit and be like, well, I don't think they've done a big deal. I botched this so bad. I should have accumulated the whole basket just on the simple idea that they're all going to get hyperscaler deals. I don't know which one's going to get it. I don't know when they're going to get it. So just buy a little bit of all of them and just sit on it. It was the same thing with Quantum. I blew Quantum so bad. I mean, I had a couple of good trades, but not nearly as many as I had liked. If I would have just, and then I applied the logic to robotics and I got absolutely smoked. I started the PW RoboTurd ETF and I just got wrecked. It's publicly documented on Twitter if you want to scroll back, but it was all based off this quantum idea where it's like if I would have just took a 10% position and plot 2% in all the quantum turds, uh the thing would be up 1,000%. But instead I just got chopped around. I shorted Rigetti really well here. And then I had a really good IO and Q long. But yeah, I went then to buy Serve. So like I bought Serve here. I want to say right, maybe actually I think it was like one day. I think the PW RoboTurd ETF existed for one day before it just got wrecked because we had this gap down. I bought Serve, I bought PYDN because I was like, oh my God, all these themes are just running. Let's accumulate all the robots. Was it PDYN?
Yeah, propeller.
And it's just such a blunder because there's a huge flaw that I didn't see ahead of time is that all these robotic companies weren't really robotic companies and they all do things very differently. While the quantum companies, they're all not companies, but they have one thing that's all the same, the word quantum associated with them. That's it. That's all they needed. That's all they needed. And, it's like, oh, a new type of computer that's gonna like, I don't know, like allow us to like summon black holes and like crack like cryptography and stuff. Like, I don't know. Like, and nobody knew what it was, but everybody bought them, and I can't believe they're still kind of holding up. That was a yeah, that was a big blunder of mine. Had a lot of good ones. Uh, my best trade ever, I can show you, was MSTR. I bought it right at 200 roughly. So it just had like this year-long base, and at the same time, SMCI was kind of coming out of this same sort of formation. So was NVIDIA, but I just had really big size, like kind of reckless size. But I had conviction in it with Bitcoin, and I took some time to learn about Sailor and like the price of Bitcoin to NAV ratio and like historically how, they expand and the cycles and whatnot. So I kind of dug into that a little bit and I just bought it and I held it and I caught the whole move and I flipped short, which is kind of crazy. And SMCI was another one. I had no idea what SMCI was. I learned later that they just like made racks. It probably explains why their price is where it is now. But this one, it's basically the same setup.
Yep.
I got my first piece in off this dip off the 20-day. So I actually bought this dip into support. This is a tiny piece because it was this gap low, like this kind of gap level.
God, I swear we've interviewed like 5 traders now that said they started their small piece on that pullback that day and then bought
Really?
the breakup. Yeah, I
Yeah, no
swear. I
shit.
mean, almost every, yeah.
Yeah, and then they had the surprise earnings, right? Like, so they released them a little early. But
I
this was,
remember doing the math that morning in pre-market based on their surprise earnings. Um, and just back of the napkin math based on their raised guidance that they were going to be a $600 stock and it would be the same price as it was the day before when it closed. Like the same whatever valuation, and I didn't even factor in increase in like a multiple, like which then I would have been like an $800 price target at the time essentially. Um, Again, I was just like, how impactful is that raised guidance? When in reality, that was one of the cleanest
yeah,
breakouts
so
ever.
clean.
Hey, speaking, someone asked in the chat, where do you listen to earnings calls? Where do you get that information?
I click this button and I just go to listen online.
There
It's
you
right
go.
here in the house. Yep.
Where does that bring you to? Like to their company website?
Yeah, typically to their company website, like a webcast page.
Gotcha.
That's right. That's where I listen to them. I'm building a bot for my server right now where we'll automatically pull them and it'll open up all sorts of different channels so that just kind of for myself, a tool for myself, so I can every day, all the conference calls that I'm interested in will automatically stream. This is something I'm building.
That's
Uh,
sick.
it is sick. It is sick if it works. Uh, yeah. What's on your watch list for tomorrow? Anything good?
I haven't done much can yet. I've had the kids dinner, got them to bed, and then came down here. So once we get off, I'll spend a while going through some charts. I'm not exactly sure yet. Um, got a position in Reddit there. A lot of things triggered today. A lot of things need more sideways that I've got, which I'm kind of anticipating. Um, some of the scans to show. Um, yeah, I don't have an answer yet because I'm gonna do that once we get
I
off.
guess we didn't really talk much on earnings gap ups and like EPs and stuff like that. But this
Uh,
path, you bought
yeah.
this today?
This path is
No,
sick.
no, 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 no. I bought Path. Um, I have a high 13s average. Wait, no. Where's my average? I have a 1407. I've been buying
Nice.
it all throughout this whole kind of.
Oh yeah, I feel like I remember you posting like an intraday chart one of those days and you were saying that you
I
were
got chopped
accumulating
out
it.
of it once. I bought a lot of size right here.
Okay.
And I obviously got chopped out. Uh and then I was just like, look, I just want to own it. So I just started piecing myself in. But yeah, I have a 1407 and I don't have a lot of size, but I did look into them a bit. And I think that they're misunderstood, similar to Palantir was, right? Uh and I think that people like are going to start understanding what they're and especially with their further relationship with Microsoft.
Yeah.
That kind of solidified it for me when that news came out a couple of weeks ago. Like I'm paying attention much more to news now. Obviously, I'm trying to learn more about the companies, but that's it really wasn't necessary, and it's still not necessary. Like I really don't need to understand them. But if I were to just like trade this from like a technical perspective, just as like an EP, well, it depends on EP is a slippery slope. I'm a firm believer that EP is the most widely misused term in the stock market. I'm very particular to terms.
Are you an EP purist? Is that what you're
I'm
saying?
with it. I'm with you on that. I've always been one of those guys as well.
No, I mean, I just come from like a technical place where it's like if I'm working with technical people in like a professional world and we're all not using terms correctly, how do you have a conversation? Right. And like I can't wait to meet Pradeep one day because I'm just going to talk to him about it because it doesn't make sense to me. I mean, fundamentally, an episodic pivot means that some news event causes price to suddenly change and the price trajectory to suddenly change and be sustained, right? And the only way to know that it's sustained is if you're in the future. You can't know that in the moment, but you can line up many factors in your favor to better predict EPs. And so, there's two different types of EPs for me. Earnings EP, there's three really. You have a macro EP, like the Fed comes out and says something great and causes the markets to go, everything to go, right? Lowering rates, right? Russell's up. Okay. That's one, like macro EP. The second is just like a news catalyst, right? Like something great happened, a big partnership, whatever, I don't know, a deal. Okay. And then the third are earnings EPs. And the earnings EPs are the ones that I've really studied in depth. And mainly because they're much easier to quantify. Uh, and so it has to do with like EPS and whatnot, like just their earnings. Acceleration, essentially.
Mhm.
And then did the expansion candle breach like really key levels? So like the only relevant level here still for path is like this level. Above that, it's basically blue skies. Like you can erase all of this old chart history. It's like a new chart. First time they're profitable, it's probably going to happen. So if I wanted to trade this, I would essentially be looking for price to kind of sell off. So like if it opened like down here, or if it even came down here, retested. But even if tomorrow, like if it's slightly opened below the close and then undercut and push back through it, that's a very legitimate buy, even on day two. And if you go back and study, real powerful earnings, and then companies that actually went on to be, in hindsight, verified like EPs, that like and ANF is like a really great example of an EP. There's so many. You just go back and look. Let's see. So okay, wow. So there's the EP ignition candle, right? Like here, like you're like, oh, ANF, wow, nice earnings, cool. Like you're still in the range. Like how can you say that this is like an instance where the company is pivoting for like a long duration? Like fundamentally, something has changed with the company to cause it to to move in a new trajectory or at a different angle for a long time. You don't know that. You only know it in hindsight. And you're like, oh, that was an EP. So anybody that says EP day one, they don't like it doesn't make sense. But even Pradeep says EP day one. Uh like and so for me it's like there's many criteria, there's many things that can happen day one that significantly increase the prediction
Mhm.
power of whether or not it's going to be an EP. And that has to do with did the ignition candle clear like a big range? Is it above all relevant moving averages? So this would be like in my checklist. Like, uh, is the EPS beat triple digits, right? Like, is it neglected? Is it a surprise, right? Like within 24 hours, how many price target increases are there? Like all those things together are very quantifiable. And if they all line up, you're like, oh, this one has like on your, whether or not it's your EP prediction scale, it scored the highest. And then you just buy the next technical setup. That in a nutshell is how I approach everything, right? It's just like moon's line, moon's a line, moon's a line, green light, go. It's like the slot machine analogy that I use a lot. But yeah, I mean, this was an EP, even though it only
Do
lasted for a year. But
you buy like day one ER gappers like that?
yeah, for sure, for sure. So
Yeah.
does Christian Koulamagi. So does Pradeep. Absolutely. How do you do it? I don't even know what Path's earnings are. I haven't had time to even look today. Let's look at, of course, this is going to be in hindsight. Let's see if it was easy to do. Yeah, actually it was. Okay. So like, where are you wrong? Like, this is the 5 minute formation. Like, where are you wrong? Like, if you were to buy it today,
15.7, whatever that is in between.
like you can even give yourself some slack and take smaller size and be like, I'm going to use, I don't know, like even 1550. You want to use 1550, like, and you buy it over this line. You just like, let me see what the drawdown is. Okay, that's only 5% difference. So if you took a, even if you took a 10% position, that's a 0.5% stop up. But you're buying this ignition candle. So like you could have just used this ignition candle low. Like, and so you have super, super tight risk. Like swing trading too, like, my win rate is 33, and on a good year, maybe like 35%. That's my win rate, which is crazy. I think, it's crazy to some people, but like it's a numbers game for me. And that's also something that I hear a lot where people say, oh, like all of my data suggests you don't take less trades deliberately. Like people say trade less, take less trades, like you're taking too many trades. Like I only took 80 trades and look how well I did. That is not the right way to think about it at all, in my opinion. You need to take as many trades as your opportunity set allows you to. So if your opportunity set allows you, if there are 10, if there are 100 trades in a quarter and they all meet your criteria to execute, and you are able to, meaning you have, you're at your desk or you catch the alert and you have liquidity to deploy, like that is how many trades you should take. If you take less than you're able to, you underperformed. And that's just it. Like if you take trades outside of it, you underperform. Um, and that will be reflected in your score at the end of the year, which is your
Mhm.
you know your annual P&L, right? uh yeah, I think people, they're just so wrapped up in how much money they make and how often they are right. But if you build a slot machine that you have the ability to build a slot machine, and when the button is red and you press it, you lose money. If the button is green and you press it, you make money. Are you ever going to press it when it's red? The trick is to know when to press it when it's green. That's all you have to do is figure it out. And it's a lot easier in that analogy because you can look at it and things green, you press it, you make the money. But I mean, it still holds true. And I just think, that just goes back to like the systems analogy. But here, yeah, I would have just bought the 5 minute like opening candle. Let me see. I'm curious where the pre-market. Okay, highlight. Yeah, I know a lot of people buy 5 minute orbs, so they would wait for the 5 minute candle to close. That's fine too. I see this range on the 5 minute chart. And then for me, I see the MACD turn up immediately right at open. So I trade MACD crosses. So I don't buy unless there's um, like a 620 cross on the 5 minute. It just helps me time things better because there'll be so many times where I'll get size in and just to get like chopped out or something, and all I had to do is just wait for it to flip. It's actually another Gil Morales thing that I learned from him.
I was about to say.
Yeah, yeah, that's another Gilly thing. Yeah. I wish he would just talk to me, man. I'd tell him how much I appreciate him now. But yeah, anyways, Or what was another one? Oh, we had let's see one that probably went bad. MDB Mondo. Okay. Yeah. Okay. So if you would have bought this one,
Similar look.
would you be stopped out? It would have been frustrating. Yeah, you would have probably closed it because you weren't going to hold red or something.
Yeah.
Unless you really believed in them. I don't know. But like there's no point to even if you really believe in them, like oftentimes the market's irrational, even if they had great earnings, whatever, like if they could gap down, who knows? Somebody's just getting out of it. So like, yeah, if you were to buy it, you'd be sitting red. There's no reason to hold it. You would have just sold. But this was a really nice start. Like you would have been pretty stoked, if that was the beginning of your entry. It probably it gapped up a lot though, right?
It did gap up like 25%
Yeah.
almost.
Yeah, it gapped up.
Somewhere right around it, maybe less.
Maybe like 20, 21.
Yeah, okay.
Yeah, much smaller of a gap up too. Only 8%. I mean, that's
Mm.
slightly over just one APTR. In hindsight, they're so clean, right? Just like, look how clean that was in hindsight. I mean, I still think this is a choppy POS, right? Like this is not nice to traders. I mean, look at these red candles. Like you can't ignore these. I mean, you can. Oftentimes I do. Actually, sometimes I even delete them.
There it is.
Sometimes I even delete them, just because they annoy me so much. Especially if they're not relevant. But I will literally delete a candle. Like I'm just like,
They make fun of me all the time because I say I delete candles left, not like yeah, I do it all the time. I'm just like, this
I'll
is
show.
distracting me from my objective with this stock and preventing me from seeing the true structure of this chart. I'm going to delete it so I can see it purely and take action when that trigger occurs.
Okay, so I mean that's great. You're the first one I've ever met who did that. I like this right here on Hims. We all know this dreadful.
Oh
Um,
yeah.
see if I can remove it.
Oh my God, you can actually remove it on TOS. That might get TSDR to completely switch over.
Oh baby, look at that.
You
Oh
can
wait,
literally
wait. Oh, I
remove
put
it.
it back. Hold on, let me get rid of it for good. See, this can't. All right, I'll tell you why I removed this one. Well, for one, I felt like it was just like flicking me off, so I kind of took it personally. Two, it made the chart look better for me. So that probably also wasn't a great idea. But really, like jokes aside, the main reason why this is the line regardless. If it gets stuffed here, if it gets stuffed because yes, that like middle finger candle is there, but like it doesn't change the level. Removing it doesn't change the level. And it just
Yeah.
annoyed me. That's why I removed it. It didn't really have any impact on anything. I mean,
Yeah.
now this was pretty brutal of a gap down, but
Yeah,
I
it
mean
turned out to suck because it
I mean,
just
it's the
gapped
same
down
thing,
some.
Christian did with his trend lines. I mean, he would get rid of, some
Oh, yeah.
candles out of the range that didn't matter. He was just focused on where the breakout was of, the pattern, really.
right, right. I there's a big movement against like diagonal lines. I think they call them like squiggly lines now or something. And I just love like have you ever watched, a Christian stream? Like what he draws? He just draws lines through the meat of it all, right?
Yeah.
He doesn't ever draw horizontal lines, or very rarely. And the only horizontal lines on his charts are his like stop levels. Um, Bracco, what's on your watch list? God, this thing looks bad.
I'm actually not going to be here tomorrow.
Where are you
I'm
going?
traveling tomorrow.
Oh, okay.
I will be here in the morning though.
Let me see what's on like the long list. Mm-mm-mm. There are some like really cool looking things coming up though. Oh, this was a good one today. This was like pure classic Gil
Oh, yeah.
Morales, undercut and rally of the 50 day and the base low.
A lot of these look like Oliver Cal wedge pops. By the way, all the UNRs.
Wedge pops, is that what he calls them? I'm
Yeah,
not
it's
familiar.
his cycle of price action. By the way, that's yeah, they look like wedge pops.
What define it? I mean, is it
It's
this?
just like when a stock like is basing below the 20 MA, moving averages are tight, and it just like powers right through for like a buy day, like EOSC basically.
Okay. Okay. Yeah, I mean that's the thing. Like so often I will say something and it's just the same.
Yeah.
And and he probably discovered it for his own. And he probably didn't know what. And if you were to read like, a technical analysis paper or something from like the 50s, somebody else characterized it in
Yeah,
some other way,
exactly.
right? And so like the reason I called it PWNR, this is actually kind of funny and slightly embarrassing because I didn't know what a pivot was. And this was like literally up until like a year ago when I discovered that DraftKings PWNR. And somebody was giving me shit about calling it a pivot, and he was like, "A pivot's already a term that's defined." I'm like, "It looks like a pivot, right? Like it looks like a little like a pivot, like a little U-turn, right?" And that's why I called it that. And they're like, "Okay, no, you can't do that." And like, "All right, fine, I'm gonna call it this." And like, I haven't found any other. There's probably a definition for it, like where it undercuts a left side peak and moves up, and then I'll have to remove my gamer tag from the front of it. But yeah, like, anyways, this thing looks great. NTRA, it's
Yeah.
a beautiful. I have a 209.58 average.
Nice.
Bottom of the grade here. It's slower. I'm kind of afraid to look at SoFi.
Hey, they had an offering just like a couple months ago, didn't they?
Just I don't I I mean that's a lot of money that they raised. I'm kind of curious. I got to look into it a little bit. I mean the chart isn't broken.
Not yet. So the last offering they had was God, I can't remember that, but it was recently. And they were very adamant that it was going to be immediately accretive to to EPS, and it was. So it might be received positively. We'll see. It might not be because second one like super recently. It's pretty large. I think it's $1 billion offering, maybe 1.5.
Yeah, it's
I mean, you
almost.
could look right to the left. I think it was, yeah, the July 30th, right after their earnings move, they had that offering. Uh, yeah, July 30th. Yep, I have it on my chart.
Yeah. Yeah, and it got gobbled up. That was for 1.5 billion too.
I think so.
Man, they're spending money.
It's a lot.
Um, I got chopped out of this one a couple of times, but with regard to like the Chinese stocks, I really like this PWNR. Like it's kind
Hmm.
of occurring right now. I mean, it's obviously the chart flavor of the week, with all the sell-off. But yeah, it undercut this kind of key level. You have this base low. It popped up. It's forming a flag. Uh, it's definitely in chart theme. I wonder what Baba looks like. Baba, pretty similar, same kind of idea. Um, Lyft is on my radar now. I don't know what's they've always been the redheaded stepchild to Uber, right? But it's always made like I don't know, it's emerging out of this giant bottom base. And Uber, what's Uber looking like? Uber's not really a trading stock, but it's definitely holding up there. But Lyft looks good.
There were some people talking about BBAI in the chat today. Is this
Hmm.
like too mid-range for you, or is this
Yeah.
something?
This is great though. I love this is like SOUN. All right, I'll show you the equivalent. Let me pull this over. Okay, that didn't work. Unlink. Okay, charts. Do you see if my right chart is it like black?
Yeah,
Yeah.
it's black.
So yeah, this is a like a toss glitch. Oh, I have an idea. Never mind. Okay, well, I was gonna pull SOUN up side by side, but this is basically where SOUN was like here in my mind, like somewhere like down here. I just think they need a lot of sideways still.
Hmm.
I mean, it's an unprofitable company, highly speculative. This is great formation, though. I mean, this is a huge base that's forming. It did just pop through this left side peak. Like, it does look good. Like, I mean,
It's made some
these are all
sick
positive
moves too.
signs. Yeah, it does for sure. I just needed to kind of go up more, and I wanted to
Yeah.
like get closer to the breakout level because if I were to buy something in here, I'm really just playing in between $6 and $9, which is
Yeah.
cool. I mean, like you could find some like nice little like wedge pops or like whatever. But really, I want this. I want
It's
like
got no momentum. Yeah.
yeah, there's no momentum. Exactly right. Yeah, yeah. Thank you, Rocco. Yeah, it has no momentum. Like I need to see a big move up on momentum or some like renewed catalyst or something. We call it savage volume, like a savage volume stick. Like you can see them here, like where it's just like volumes 10x the 100-day average or something. This is a great look at this stuff. I mean, there's another concept of volume breakout. So like you have price chart breakout, you have MACD breakout, which happens. You have volume breakout. When they all coincide, it's best. So you're kind of getting that here. Uh, but for me, this stock should have momentum. It doesn't really, but this is a good sign. I mean, like, it's a good sign. Uh, yeah, I know people call it like, like the next Palantir or whatever. I do like they had this kind of kooky CEO, uh, and I'm glad they got rid of her. The new guy, he seems more with it. I wonder how like our cat looks. Crap. And then like RR. Wow. Big thrust today. Must be with Trump's robotics comments.
Yeah, I think so. Kind of sparked momentum back in the market.
I wish that there was more of a robotic theme. The problem is it's just like robotics is the equivalent of saying biotech. What is it? IRBT, iRobot. Is that it? Yeah.
Beyond 2.0.
Yeah, I think maybe. I mean, that's a hell of a volume candle yesterday. I mean, robotics is just so broad. Any company that utilizes machinery in their processes will be using robots. Every single one. So like what theme will emerge? I think we may see robotic themes within biotech, like micro robots for like, going into like people and like explain like you may see something there. I don't know. Like there'll be niches that emerge, but they're just not
Mhm.
obvious right now. Like, I don't know where there's going to be like a humanoid robot theme. Like, no, 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 no. That's just going to be dominated by Tesla or figure IPOs or like Boston Dynamics, right? Like no, like I mean, they just buy Tesla, like I mean, or buy TSLO. But I don't know, like what is a robot? When people say robot, they think like, you know, a humanoid robot. But really, like, the Teslas with FSD, they're robots. It's an autonomous machine is a robot. It's just broad and there's no themes. Like iRobot's the Roomba, right?
The Roomba.
Yeah, yeah. Like okay, the Roomba theme is gonna take off. And the main thing is though, if you were to look at all like the crappy robotic companies, they don't really have the same like there's no like chart shape. That means that like they're not being institutionally accumulated. Because if somebody really wanted this bucket of stocks, which had hardly any commonality, uh, the charts would resemble one another, like Quantum did. They all look the same.
Yeah. Yep.
Um, and then like right now, there's tons of like Hood, right? This shape looks just like NBIS.
Yeah.
Very different companies, but why are their shapes the same? It's because the same market moving pockets of money are buying them. It's in the same basket, it's in the same bucket. And so like it's just they're random. Like I can't name three robotic companies that are like even remotely the same. MBot was another one, right? But this one's actually interesting from a business perspective. I think Kit is one. I can't even name that. I don't even know.
There's RR.
Yeah, or
Had big 2-day pop today. SERV.
Serve.
So
Yeah, Serve. That's
big 2-day pop.
Serve and RR are like the only two that like kind of look together.
yeah, but they are pretty similar though, Brocco. You're right. They are similar.
I don't know. It feels like a really like definitely one of the most like highly anticipated themes in quite some time. Like when
Mm.
Quantum happened, like no one was like really ready for Quantum. It just like happened and everyone piled in, right? So I don't know. I feel like with something like this, you can kind of wait for the market to tell you what, the leaders are going to be when the time comes, right?
I agree. And so like the cool thing about quantum is if you go back and look at the conditions before they really started moving, oh man. Um, from IONQ to QBTS to RGTI, they all had identical shapes. In fact, they've had identical movements since the beginning. They all have. Like it's just like the purest theme that I've ever seen. from chart shape to nobody knows what they are to they all have the exact same meaningless economic trajectory. Like literally, they are all spitting images of one another. Like they have zero like foundation and fundamentals. Uh, and they're just going up, just going up. I mean, that's it. Like IO and Q, man, these guys. It was a great trade though. Gave a bunch of really good opportunities.
Yeah,
Okay,
those did
make
look
it.
so similar. I would say the only other ones were like some of the data center plays earlier this year were
Yep.
like like the like Irene and like Cypher. I couldn't even tell the difference sometimes between the two.
Identical.
You
You're
know,
right. Exactly. And then look though, they all trended as a group. And like, here's the thing. You didn't even have to know what they did. Like, okay, knowing that quantum was quantum gives you no edge. Because actually, in fact, knowing that it is quantum just causes you to question it even more. But
exactly.
if you just focused on liquidity and range or liquidity and range and the fact that you have four charts that are identical doing the exact same thing, like chart theme kind of trumps, the actual narrative theme because it's like, oh, quantum, like, no, no, no. Like it's the same thing with the data centers. Like still, nobody really knows what they are. They don't know what a data center looks like. They don't know where they're located. They don't know anybody that works at them. Uh, nobody knows what they really are. Like, what do they do? And then also nobody like technology is moving so quick. People don't know, like, are they going to be around? Like, is this a long-term investable thing? I don't know. But all the charts were the same. Like, they were all the same. They made big linear moves. Like AEVA, that was my only qualm with it, where I didn't see other stuff that looked like it. And I maybe it's probably part of the reason why I missed it. I feel like there was another one that ran with it.
OUST,
Which one?
OUST. It was a little bit. No, it was a
Uh,
little.
there
Um,
was
what's the China one? Is it that one?
HSAI?
No,
No, that
that's
was
what I
last
was
year.
thinking of though. That was later.
this one was good. I think it
Where's
actually.
B when we need her?
Yeah, no, I think OUST was just shortly after. Those were similar.
This LAC and some of these rare earth companies I'm eyeing pretty close. I think LAC uh has some potential. Some of these like earnings consolidations recently have been a little bit trickier. FSOI, it's still valid, kind of revalidated itself today with that hold. Um, it's another one. Look at APPN. Tried that earlier in the week. Did not work. Needs to get going. APPN. FROG Frog.
There is one emerging chart theme that I'm seeing, and it all started with INTC. So INTC broke out of this bottom base.
Hmm.
And it just kind of emerged from the depths, a very neglected, kind of thrown out company, and then things all of a sudden change. There's
Hmm.
another one that just emerged, Rivian.
Oh, Rivian, yeah.
And so it has even a more dramatic uh, kind of stretched out bottomed base. But it's another, thrown away idea that's stuck around long enough to kind of figure it out. I don't know what the trajectory of their business, like their pipeline is, but what I do know is that was a really big stick on volume, on earnings. They have this huge foundation, still a ton of volume. I mean, the thing trades almost $1 billion a day in this crazy range. And it's now starting to show momentum. And the volume's just increasing. The MACD is finally like kind of staying above. Like every time you look back at the MACD and it kind of takes a dip, it just cracks, cracks, cracks. But here, it's moved up. It's made a big move. It got a down cross, but it held, and now it's trending back up. I mean, these are all great signs of this thing emerging. And INTC kind of led that for me. And there's a bunch of charts that look like that right now. Path is kind of similar. Path is definitely starting to
Yeah.
emerge out. Um, but yeah, it's like these.
Even Lyft is kind of in that category. It just hasn't gotten that kind of kick in the ass yet.
Yeah, I would say it's definitely kind of there too. Yeah, I mean it's the and you're right. It's Lyft is like second rate to Uber. Rivian is second rate to Tesla.
Yeah.
Right? INTC is literally the bottom of the barrel of all the semis, right? But these forgotten about companies with, I think, the utilization of AI, uh, you know, are taking it. I mean, I don't know. I think that their prospect of like survival, like being able to survive, is probably heightened considerably. And if anything, they're definitely going to become more profitable through, um, through the advent of AI. And I think that just applies to literally every industry. Um, and that's like the underlying thought why I think the market just keeps going higher. Like you wouldn't see these names emerging out of like these like pits of despair, like this late in the cycle when, like
Yeah.
I mean, obviously, like this was a compressed, correct, like a compressed, yeah, I mean, like I don't know, like a bear market in like a month, essentially. Down 20%, I think they call it a bear market. Is I mean, it was literally a market crash. So maybe I can give us some slack, and keep moving, keep pushing, and markets truly only go up. But I don't know. I mean, I just think we're in a period technologically where like we've never seen anything like it, and it's really hard for us as humans to understand the exponential. And AI is truly uh, advancing at an exponential rate. We just can't even quite understand it. I mean, humans are literally the main bottleneck to it, particularly with like red tape and just overhead with government and regulation. But
And like
yeah,
maintaining society, organize like the organization, like
yeah,
without an overthrow occurring because of the how productive it can lead to.
that's a whole nother conversation that we'll have to have one day. But
I know
China doesn't have those problems,
they do. They
uh,
do not.
which is a little scary from a national security perspective. Oh, look how well squiggly lines work. Well, this one's a straight one, but technical analysis is just people call it voodoo, but it's really not. Anybody who calls it voodoo, I just encourage them to look at like the Dow Jones and just go back year over year over year and just try to come up with more than like 10 patterns that lead to big moves. You just can't. They're all the same. And just over and over and over. Well, yeah. Are there any other questions that you see, Braco? Anything else we should touch on?
I
Or
don't I
wrap
don't
it up?
think
This
I
has been
see any
great.
more. No. This has already been our longest workshop we've ever done. What's it been, 3 hours? Yeah.
That's it. That's it.
We still got a good bit of people in here in all the three streams.
I got another, she leave. She's probably sick of listening to me, but I think that was probably my cue to get off though. But I mean, I could do this anytime, Time flies when you're having fun, I
That's
suppose.
right.
But no, thanks for having me on, guys. This was
Thanks for
awesome.
coming on.
Um, yeah,
Yeah, man. Um, yeah, I appreciate you for taking the time and for that phone call that we had, the other day. Means a lot. I look forward to some more in the future.
I guess we'll
And
just have to come on for a chart talk at some point next and return the
yeah,
favor.
yeah, we can do an equally long session. So I sit down at those things and I'm like, man, it's only gonna be a half hour, like 4 hours goes by. Like,
Yeah.
but I hope it's useful. I haven't seen any of the comments. Kind of, I don't know. I'm sure your like viewer base is probably a little bit more sophisticated because like a little bit more experience. Like they understand a lot about what I'm talking about. But
Mhm.
for people just like kind of getting into this and listening to me for the first time, uh, yeah, I would say that, really, if you could just please, like, don't click buttons. Like, really try to like restrain yourself from clicking buttons. And what I mean by that is like just buying stocks. Really just try to focus on finding like an edge, like a way that you can make money consistently, even if it's a little bit of money. Like just prove to yourself that you can just make a little bit of money doing one thing consistently. Like earn the right to then add another mechanism to your playbook and start pushing the envelope. But just please don't blow up. I'm like the Brian Johnson of stocks. Like, don't die, don't blow up. Like, please. And hopefully, we'll be able to release some. I'm working on some tools and things that we'll be able to release in the near future that'll help prevent people from blowing up and kind of teach them the way. But no, thanks guys. Thanks a million. I'll have you on next time, and I'm gonna sign
Thank you.
off.
All right.
Thank
Good night, everybody. Thank you guys for tuning in.